Hello, everybody. Welcome to the official Robinhood Q2 stream with myself and Mr. Future Investing himself, Tanner. We are here to break down Robinhood Q2 earnings. We're going to preview it for the next 30 minutes, talk about our expectations, ideas. We have entered earnings into a very interesting macroeconomic environment, which might hinder some of the results that we see potentially. So we're going to talk about those implications. And then obviously we'll be streaming the call at, I think, 4:30 they go live, and we'll break it down from there. Tanner, how you doing?
Doing well, brother. Doing well. Excited about the Robinhood call. Recently just bought the little dip that we saw on Monday, so that was exciting. Out of everything that I even track, Robinhood was the number one largest dropping stock out of the companies that I follow. And yeah, we'll have to see if it's warranted or not. But I'm here and I'm stoked.
Yeah, it's interesting. So Tanner, for those that don't know, he bought after Q1. He started buying a lot more Robinhood. They had really good results Q1, and stock didn't really move much from that. So it actually went down the day after. And right at this price, around $17, that's where Robinhood was. And then from there, it's going to be 6 months from there. So we got to 20-ish around March, fell all the way down to 17 after earnings, 16-ish. Then we bumped all the way to 24.50, and then the NASDAQ collapsed. We had this Japanese carry yen trade kind of collapse, and we're right back down 22% over the month, now at $17. So I think let's start with this question, Tanner. You said you recently bought the dip. I bought the dip as well. None of us believe Robinhood should be in the $17 range. Why did you buy the dip as it fell from 24 to 17? What compelled you so much about the valuation to pick up some more?
Lowering my average was nice. Lowering my average, and I don't believe that the business is getting worse. I believe that it's getting better. So that was really exciting. And I mean, I don't know, man. You've got Vlad Tenev's probably like his personal number, so I'm sure he said, "Hey, man, business is good. Buy some more." So.
I love how everyone thinks I
you
have
tell
his
me,
number.
like,
No, I do not have his number, but I do stock the company and I listen to the CFO and CBO and what they're saying. And look, I have a lot of thoughts, but at the end of the day, let's get into our expectations here. I think this quarter is going to crush. I don't know if the stock's going to crush. I think the quarter is absolutely going to smash. They should call themselves Smash Burger after this quarter, quite frankly, because they're going to smash. They're going to smash gold subscribers. They're going to smash deposits. I think they're going to smash trading revenue, specifically for options. Interest revenue, I think, is going to go down a little bit for a couple of reasons, things with margin, et cetera. They spent a bunch of money on acquisitions, so lowered some cash, but I think they're going to do well. So what do you think they're going to show this quarter? Over the past 3 months, we had the meme stock rally, GameStop, et cetera. Robinhood was like number 50 in the entire app store. How do you think they pull off this quarter?
I mean, it's hard to say. Even some of the comps, like what Wall Street is expecting this quarter, is going to be aggressive. So, like I said, I don't know how the stock will actually move, or sorry, like you said. But from what we could see from Vlad's posts and everything on the retirement account side, that they continued to grow throughout this quarter. If that's anywhere the same within their gold subscribers, their options for June, because that's the only month that we're actually missing in terms of the overall volume, then we'll be some pretty happy campers. And then even what you're showing off there, although they have been bringing in some money on the credit card, we haven't really seen it, with Robinhood cards. We've only ever seen it with X1 cards.
Right.
So it'll be interesting to see already some of the numbers there, because then that'll allow myself and some other, big credit card nerds to start breaking into, is this a profitable product? Which, unlike some people, I'm in the camp that I'm actually not quite sure yet. So It'll be interesting to hear, now that they actually have some data, how that's going to do.
Right. Yeah, I agree. We're going to get a lot of clarity on a lot of things. Again, and I just want to keep repeating this. We are entering a macro environment. To give a quick summary of the things that have happened over the past couple of weeks. Japan raised their rates. And because they raised their rates, a lot of people got caught up in this yen carry trade. They had to sell off U.S. assets. S&P fell 10%. We had the VIX spike to the highest level since 2020. It's just not a good week for Robinhood to be reporting, for any company to be reporting. However, the market has been able to give some multiple expansion in terms of share appreciation for the companies that really crushed earnings, like a Shopify today, like a Palantir on Monday. And so I think even if Robinhood crushes earnings, there's a chance, the stock can do well, but it's going to be tough in this environment, given Robinhood is kind of a bull call in the market. And if you think the market's in trouble, then you got to think to an extent Robinhood's in trouble. Upstart up 50% as well. So what's also going to be really important, you need to explain that one to me because I don't understand that. What's also going to be important though is if they have solid numbers and the stock dips, I think it's very important for investors that are watching to be not too emotional. When it fell under $14 the other day, I put it in order. I got filled. It was a very quick dip. I think the risk reward has skewed. If it was 24.50, I would say, yeah, like it could fall back to 17 and it could, it could be tough. Now that it's 17, do I really see this falling back to 13, 12? Maybe. But if it does, I mean, you just shut the hell up and you buy, right? Especially if the numbers are solid here. So given that macro uncertainty, we're going to see how the stock ends up playing out.
I honestly, I'm really focused in not just on, how much they throw to the bottom line. I want to see a lot of those long-term statistics, right? Gold subscribers, not just gold subscribers though, commentary on it. What are they doing with the pricing there? Retirement accounts, set that base. This is really, if the consumer's really weak, if we go into a recession, if there's pullback in markets, a lot of people have a lot of different opinions. If that does happen, this will be one of the first quarters where Robinhood has a steady base of recurring revenue that might allow them to not look nearly as bad in this environment than what they did back in like 2021, 2022-ish of really markets correcting.
100% agreed. And so I think the markets are really going to ask themselves, hey, if the consumer's weakening, Disney said some stuff about the consumer today, McDonald's, Nike, Starbucks. Then you had some other companies, Shake Shack, Uber, Lyft, saying actually consumer's fine. If the consumer is weakening, is the consumer able to trade options? And the consumer is retail because retail is a majority of Robinhood's customer base. So let's take it step by step. Let's talk about
majority of Robinhood's customer base. Majority. I like how you said that.
Oh yeah, it's the entire customer base essentially.
Well, Bitstamp is bringing in some institutional.
Okay, so let's start with that. Let's start the first part of the coverage with crypto. They acquired Bitstamp. Crypto revenue is probably going to be down. They're not going to print 150 million like they did last quarter, 120 million. We saw Coinbase's numbers go down. What do you think happens with crypto this quarter?
I think exactly what you said. I think it's going to be high, but it's going to be slightly lower than what we saw last quarter, higher than the rest of the numbers that they posted in Q4, Q3, anything like that. It'll be second best. And that's perfectly fine. I think that these are really long-term plays. For the people that are playing these positions in and out, maybe you guys don't look at it that way, but I am really looking at Robinhood as, are they going to be the largest play as, boomers are having the largest wealth transfer to the younger generation like myself and Amit, and what brokerage are they going to use? And it's going to be one of these newer ones, in my opinion, like Robinhood, and I think that that's how they're going to grow. So
I agree.
With crypto, I mean, it's not going to be a March 23.6 billion dollars worth of volume, but we're going to see some decent volume and better than the rest of the year, or better than previous years that we've just seen.
Yeah, so if we do some math, we're looking at the crypto volumes right now, guys. So if we do Jan plus Feb plus March, so you basically 6 plus 6.5 plus 23.6, you looked at 36 billion of volumes. This quarter, we know we did 10 in April, 7 in May, so 17. So to get back to 36, they would have to put up 19 billion in the month of June. I don't think they did that
No.
Because crypto, it was a bit weaker in June. Maybe in July it got a little better, but crypto's weak in June. So as a result of that, this number is going to be lower in terms of how it correlates to revenue. One thing I think people forget about is Robinhood did increase their spread on crypto from 0.35 to 0.45. So when you're taking a little bit more on each transaction, that should help the crypto revenues, but it's definitely not going to accelerate it to the levels that we saw in the previous quarter. What? Why are you laughing?
Someone said, is Tanner drinking Prime? That's bearish.
Did you drink Prime? You drink Prime?
Yeah, it's at Costco. It was on sale. It's just that I'm not buying it because Logan Paul owns it. I'm just buying it because it's a hydration drink.
And you're definitely buying it. If Logan Paul did not drink, you would not know what Prime is. So it is absolutely.
If it's in Costco and it's a hydration drink on sale, I run every day. I'm buying it. Like,
okay, all right. Well, we got a Prime guy now. I still like Gatorade's my favorite.
But one thing that I think is important, and to separate yourself between Coinbase and Robinhood, is Coinbase's volumes, if you're just looking at it as one big statistic, a lot of it can be institutional trading volume. Okay. And that is like 1/200th the take rate. I mean, like legitimately, 1/200th. It's unbelievably low.
Yeah.
So one of the things that's really important with Robinhood's is that's all retail trading volume up until what we saw with Bitstamp. So it'll be important how, if that's even a factor this quarter. I don't even think it will be. But yeah, it is important that as they grow, that's all retail, high, high take rate environments. It's actually really amazing for Robinhood and how much, crypto they're actually getting out of the entire market.
I agree. And buying Bitstamps, I think, is genius. Bitstamps is one of the largest, or not the largest, one of the oldest crypto exchanges that exists. Robinhood gets 50 international global licenses to do business with crypto. I think that adds more to their institutional side of the business as well. So I think they'll talk more about why they did that on the call. Options. So this was the monthly option volume in April and May. 126 million in April, 131 million in May. Options is where they have the highest take rate outside of crypto. 131 million contracts, I think, is a record, if I'm not wrong. So I think June, let's say it's the same, 125 million, 127 million. This is where they're going to make a lot of their money for the trading revenues. How do you think the options part of the business has expanded? And do you think that can help create more of a revenue beat on transaction revenues?
I think that this is going to continue. Well, so, I mean, obviously it's positive. The only thing that I think it's ever going to change is whenever they start introducing index options.
Right.
That's going to be the real, how are they going to get past that? It obviously has a much lower take rate, and they might have to those options will most likely not be free to trade. They'll probably have their own separate fee, just because the take rate is so low that they'll have to make money somewhere else. But that being said, with overall options, the more volume, the better. It's seemingly that options are just becoming a much larger percentage of the way retail trades. And not only that, even the way that institutions trade. There's a ton of funds now that is sort of being looked at as like a third asset class of, okay, we're going to have equities, we're going to have fixed income, and then we're also going to have this sort of passive income, fund as well for investors to invest in. So it's really good for brokerages like Robinhood if that is the case, where people get educated in options and the fees are extremely cheap comparatively to what they used to be just a couple of years ago. So it's all in Robinhood's favor. What it means for this quarter, I can't get you an exact revenue number, but hopefully it continues to tick up in June. I haven't looked at like total options volume or something like this in markets and tried to defer what percentage of that is Robinhood's or something like that.
I did do that.
Okay.
And so we're gonna, if my numbers are right, we're gonna pull in close to, what did I have, like 175 to 180 million just on options. So
gotcha.
hopefully if those numbers are right, we should do well.
So is this your biggest play in your portfolio?
I would say this and Palantir are like half my portfolio each. My portfolio is 50-50 both. This one's loaded up more with options. Palantir is more stock. So this one's obviously much more volatile.
You have two positions?
Yes. Palantir and Robinhood. Correct.
Okay. No shit in that. You can make a fortune. Like
Tanner's like, who is this guy? No, but yeah, I mean, this year has pretty much just been those two positions. And Robinhood, I mean, a lot of people know my position. It's a really big options play, bull call in the market. I am long the stock, but if the stock does well, the options obviously do well. And they were doing very well until Japan said that we want to raise rates. So it's kind of funny. It's one of those interesting situations where you make a big play, you end up being right on it for 8 months, and then in 1 week, a lot of it goes away because Japan, macro, blah, 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 unemployment. And now it's up to the company to execute. And if the company can execute and the macro gets better, things go well. So it's one of those things where like, hey, you're young, you're taking risk. Let's see if we can pull this off. And hopefully,
Robinhood can absolutely have another Q1 moment here. Like, it's not that they can't. If gold subscribers show massive growth, if they show guidance improving drastically, maybe based on credit card performance, something like this, Obviously, it might be a little too early to get any sort of breakdowns on defaults on different cohorts. Like they wouldn't have any of that yet. But
No, yeah,
credit cards historically are like one of the most profitable products in all of finance. Is that going to be the same for Robinhood? I don't know. Cashback's extremely high, but
I agree. And we'll talk about credit cards. I think they can have a great quarter. So it just depends on the macro now as well. I think the quarter is going to be good. It's just really a question about the macro. We just had another guest join us onto the stream. Ladies and gentlemen, we got Roy.
How you doing? Can you hear me?
We're doing volume's a little high. You can
too high? Okay.
Yeah, a little, just reduce the gain a little bit and then you're good.
Roy the Wonder Boy.
So better? Roy, yeah, much better. So for those that don't know, Roy has been bullish on Robinhood for a very long time, since the stock's been like $8. He's big on Robinhood. Roy, let's get your comments as we continue the coverage on margin. So Robinhood reduced their margin rates from 14.5% to about 6.75%, which is industry lowest outside of like, I think IBKR. We saw margin expand from April, 4.1 billion to 4.5 billion. This is how much money they actually give out to people. That's their margin balance. And that's a big increase. That's a 10% increase in a month. I think in June, that's going to be even higher. Roy, do you think that was a good move? They're obviously going to sacrifice some interest revenue, but do you think they make it up with deposits and volumes?
Yeah, short term, I mean, it's going to cause a little bit of pain, but this is a long-term move. It'll take a while. It might not break even on that decision through the end of the year. But I think that we're going to see the margin book increase to above 5 billion. It might be closer to 5.5 billion than it is 5 billion as far as what they report in June. And but yeah, eventually I think that they're going to be able to get a lot new business from that, not just from margin, but there's people that I've seen that have switched what they're using as far as their broker to Robinhood, not only because of the incentives as far as being a gold member in the match, but margin. Like they use margin. You got to be careful with margin, guys. But if you use margin, like it's a no-brainer to go with those cheaper rates. It makes it, and especially with rates elevated the way they are right now, it makes it very difficult to be able to break even on that, because you're going against very high rates elsewhere. So I love the move. Long term, short term, it'll have a little bit of impact this time.
Tanner, your thoughts on them lowering margin?
I mean, yeah, they're going after a lot of credit really quick, both margin and credit cards. I hope it works out, but yeah, I'm not sure. It's I'm going to have to hear commentary for them. It could absolutely work, but yeah, there is definitely risk. That's the only thing that I feel like retail always misses, is that whenever Robinhood offers all of these incentives, lowering rates, adding bonuses to join, transfer bonuses, deposit bonuses, the highest cash back, remember that these cost money. This rapidly increases their expenses. So it makes it so obviously they're the clear choice, but for consumer, but does it make it the clear choice as an investment? I can't wait to find out.
Yeah, I think it's going to work out profitability wise, because I think Robinhood subsidizes a lot of what they're doing, whether it's lowering margin rates or the 1% bonus that we saw the Vlad tweet. They did a $2 billion over the past couple months in that 1% transfer. I think they make it up in deposits. Deposits are the lifeline of a financial technology company. You need to have more people putting money in the business. They make a spread on those deposits. They're able to use those deposits in other ways. And on top of that, they're able to increase the lifetime value of a customer because they get you on something called gold, which transitions us into the next topic. This is deposits and gold. So last quarter, they did $11.2 billion of deposits, which was just insane. April and May, which are 2 months out of the 3 months in the quarter, they did about 8.2 billion. So really, they just need to have another $2.87 billion quarter to match what they did in Q1. I think they're probably going to beat that and have maybe 11.5, if not, if it's really aggressive, 12 billion in deposits. As a result of all those deposits, they're also going to get a lot more gold subscribers. We'll talk about the card in a second, but a lot of people are subscribing to get a 1% deposit match, which Robinhood announced, and a 1% brokerage transfer. So let's start with you, Tanner. How do you think gold is going to do? And do you think that can subsidize a lot of the free money, essentially, that Robinhood is giving out?
I think gold's going to be the most exciting thing this quarter. Like that is the statistic I can't wait for. I think so many people, at least from what I heard, have been joining gold, are willing to pay much higher rates on gold. I think even, Amit, you said you'd pay something like $100 a year or something like that.
I would pay 100. Well, I was talking this morning. I would pay $100 a month if they had a financial AI LLM. I was giving examples of that, but I would pay 10 to 15 bucks a month. Right now, I pay $5 a month, so I do think the value's there.
Yeah. Okay. But so I'm really excited to see the attach rate. What they said was in their most recent cohort in Q1, the percentage of people that were actually also getting gold, not just making their first deposit or first trade, but also getting gold was north of 20%.
Yeah.
Okay.
Yeah.
So if right now their entire customer base is at 7%, just closing out those users is a massive percentage. Also, they had an additional 500,000 people that signed up for the wait list to get the credit card that also did not have gold. Okay. It's a requirement to have gold in order to get the credit card. So there is so much pent up demand for the gold credit card, or for the gold subscribers, which is just inevitably going to bring on so many more deposits, because if you have gold, then you're not going to keep your deposits at your old bank or at your old brokerage, because it's just not going to be able to match the APY, as well as the added benefits of the credit card and, all the other deposit bonuses and transfer bonuses that you're going to see.
Roy, your thoughts on gold?
Yeah, I mean, some of the products that they're putting out won't necessarily offset. Credit card is the one that I think actually does have a little bit of risk. But I mean, gold members are going to tick up a lot. It's going to help them be less cyclical, which is definitely a good move, I think, on their part. And I don't know if either of you guys, I know Tanner, actually, you don't have access to Robinhood. Did you see an opportunity to do a survey on gold and gold pricing, Amit, with your Robinhood brokerage?
No.
So
You should
I don't know if
share
it's
that.
just certain users or not, but it popped up in my notifications of like, I'm an investor, I'm a user, why not? So I go through and they're asking very specific questions as far as the pricing of that, what you would pay, what you think it's worth, and what features you'd like to add. Some interesting ideas like mortgage that I was like, I didn't think of Robinhood that way, but as far as Vlad's vision on this, it's very interesting. So yeah, gold is going to be more compelling. It wouldn't shock me if that price increases at some point, which will offset some of the losses that they have on this. But I think their goal right now, they see that there's an opportunity in the market. They're willing to spend more aggressively to be able to capture some of that opportunity. This is a really good long-term move. And I'm not a long-term investor in Robinhood. I plan to be out still in January. But I will tell you, I sold a number of cash secured puts in Robinhood. And if those fill after I think a very good earnings, I'll become a long-term investor happily at that price.
Right.
So
yeah, go ahead.
You brought up that. Sorry, I just wanted to answer that comment. Alex said that he got the survey and it said, how much would you pay for gold? It wasn't just that. They were also asking if you would take out a mortgage if it was offered by Robinhood Markets. They were asking a bunch of different credit questions. So it was much more than just that. And personally, I mean, your audience calls me like the SoFi guy. I like a company that offers multiple credit products. And if Robinhood ends up getting into that for gold members exclusively, could be pretty interesting.
Oh, yeah.
Yeah, look, I think at $5 a month or $50 a year if you sign up at once, it is a no-brainer. I think Steve Quirk, the chief business officer, brokerage officer, he was at some bank conference and he mentioned that gold subscribers are doing well. The credit card, as you mentioned, so Vlad said they have 50,000 credit card holders. They sent out 100,000 invites. They had 1 million people on the wait list. So I'd imagine if they tried to convert a bunch of those people into gold subscribers, that's very important. I think gold's going to crush. If we get over 2 million, that would be incredible. We had 1.7 last quarter, so that would be an addition of 300,000, which is going to be a lot. We already know they did 140,000. So they got to get 260,000 to get to 300. So we'll see. But I think that's going to be really important. I think that's what the street wants. Now, the estimates for the street are like 630 million. And I think those got raised a couple months ago, if not a month ago. I think it's kind of because the analysts went to Robinhood, they talked to them, they got more bullish, so they raised their estimates. That's good and bad. Bad because it's harder to beat. Good because they expect you to do better. Any thoughts on how you guys think they'll actually come out when it comes to the EPS and revenue?
Expectations are a little more reasonable than they have been in the past. I think because Q1 for Robinhood was one of the most ridiculous beats I've seen of any company other than NVIDIA in a long, long time. I think that they're still a little bit soft and cautious, and it tends to be better to do that for analysts. So I think they'll beat just slightly. There are a few pressures that they have in Q2 here that they didn't have in Q1. One of those is, of course, they're going to get a lot less crypto revenue, but they will have that boost from Say Technologies that'll offset some of that. And of course, the actual options trading, I think, will be incredibly robust with all the meme trades and so forth.
I think it's going to be very close to what Wall Street had said. What's different than last time is in the first quarter, a lot of like that crypto volume and everything legitimately happened in the month of March. It didn't happen in Q1. It happened in a single month.
Yeah.
Okay. What was very interesting with that is that was the third quarter, or sorry, that was the third month, which is the only month that they don't do their monthly updates on. So what I find Robinhood is sort of blessed to have for investors, but also a little bit cursed, is that these super surprise beats are going to be harder to come by because we're only in the dark about 33% of the company, or 33% of the quarter, not the entire quarter.
Right.
So unlike other businesses where, you're out for 3 months, we're only missing a third of their volume numbers, and it's not hard for any institution to pull out how much they're getting for each option contract and equity, and then just sort of derive maybe they're going to come somewhere in the middle of those last 2 months, right? So
Correct.
It might be very slightly beating Wall Street estimates of 15-cent EPS, maybe $640 million of revenue, and that's where I think we'll land.
Agreed. Let's see how this plays out. We got 3 minutes. We are tanking into the close, guys, by the way. S&P is collapsing, 518. It was at 527 this morning. Robinhood's barely above 17. Palantir was 2830. Now it's red for the day. SoFi's at 630. CrowdStrike 230. So great time to report earnings, but this is what it is to be an investor. I mean, this is how it plays out, and we've got to hope they have good numbers. At the end of the day, I am long, so I hope the numbers are good. If the stock does not react to it, it is what it is, and you hope the stock eventually catches up, especially because I think these are algos selling off the market right now as the numbers get baked in.
But, and Upstart is tanking. Holy crap. Can you
wait. Upstart was 50% up. Where's Upstart? No, it's still up 39%.
What the heck?
It's still up 39%, even though it was up 50%. That's not bad.
Yeah, I'm just kidding. But
okay.
Yeah.
Yeah, so as you can see, like if you put up a good quarter, which I guess the market felt Upstart had a good quarter, boom, you're up.
No.
And I personally
they absolutely did. Don't take it away from Upstart. They absolutely had a great quarter.
Great is putting things too far. It didn't deserve but market is forward looking. That's what's happening. Palantir, of course, reported on Monday into like a very tough macro day, and we saw the result today. Looks a little bit tougher. You never know. So, but we know that Robinhood is executing on a fundamental basis at a very high level, and that's really the focus, because I don't think any of us are short-term investors. We're long-term.
Yeah, and look, market cap is at 15 billion. They have 4 billion in cash, 11 billion enterprise value, growing at 30% year over year. Obviously, I feel it is incredibly cheap and mispriced. It was at 24.50 a couple weeks ago. I didn't think that was overvalued, but markets readjust based on macro, and we'll see how it plays out. Go ahead, Tanner.
Oh,
no, I was just going to say, someone said I was biased in the chat. I'm actually not a Upstart investor. I've never been an Upstart investor. I've never played long or short that company, but an avid follower of the business. Really like it. Or really like, following it. But I am a Shopify investor. That's my second largest position. They absolutely killed it this morning. So that was a lot of fun.
They did. All right, here we go, folks. This is game time. I think we get the numbers at 4, if not 4:05-ish. So we might be waiting a little bit, but 4:05 latest, I think we'll know. And then we'll get the deck, and then we got about an hour to break this down and see what happens. If you're new to the channel, we do a bell at the close, 4 p.m. Thank you, everybody, for being here. Stock market is now closed. All right, now we get to just stare at this candlestick and see what happens.
As we're waiting,
releasing 4:05.
I think 4:05. I'll keep refreshing, but probably 4:05-ish. Go ahead, Roy.
Yeah, as we're waiting, one of the funniest things happened. On Monday, Tevis and I did a open stream, which we never do, just out of an emergency thing. And Robinhood was smacked down to like $14-something. And I told Tevis, I was like, hey, you should think about getting a position right here. I told him about the cash. Like, he knows about the company and everything. I'm like, days like that have been insane as far as volatility. You made me excited by the way with all that green. I'm like, go.
It's up 3%.
Yeah,
So,
it's nice.
No, I agree. And volatility is obviously good for Robinhood. All right, so we're up 3% after hours. Let me try to get the numbers. If anyone has the numbers, let me know in the chat. But we should get the numbers soon. And see. Nothing on my end yet. Stock is up 2.35, 3%. Yeah, nothing on my eyes yet. We will see. Yeah, I think it is 405. I think last time it was also 405.
And I'm so interested to hear their credit card revenue.
Yeah, me too. I mean, they did 5 million last quarter, so I would imagine that's up, but obviously we're gonna have to see how they think about that product and overall growth.
Yeah, that should factor into guidance for next quarter. So more so than like a little bit of revenue this time. The nice thing is we're so early into the credit cards that there's not really any downside at this point. There's not an opportunity to be delinquent, to do charge-offs. So only upside.
Yeah, right. Yeah. All the revenue is going to be there.
Yes.
It's just whether we get that money back once we've lent it out.
Yeah. I think quarter 3 will be pretty good just for that reason. So.
Yeah. All right, folks, we're still waiting. We are still waiting to see what happens to Robinhood. No numbers are out yet.
So
nothing on Twitter either.
Another thing too, like what Chris Hager, data-driven investing on X, was talking about was that this is pretty anecdotal, and he put out a survey, but it didn't get thousands of replies. But the people that did get the Robinhood Gold card seemingly got some very large spend limits, which I thought that was pretty interesting, right? And so even Chris said he's putting through the high majority of what he spends now only through Robinhood, because why wouldn't you?
Yeah. No,
spend, get your cash back, and then invest it in the companies that you like, or in the high cash sweep that they're offering you.
Yeah. All right. We're up 3. No, now we're flat. No, we're up 3% ish. No numbers yet, so I think it's just playing around before we officially know. Yeah, they are giving higher credit card limits, and I think they have a strategy with that when it comes to deposit growth. So,
and they're using a Nubank guy to help with the credit style, David Cerruti, which he actually still works with Nubank, by the way.
Oh, really?
Yeah.
Oh, interesting. Okay.
So a report just came out, and Nubank just hired a new head of credit, but he's going to be working for like a few months with David Cerruti on like what's going on.
Diego, I think.
Diego, sorry. Yeah. You are right.
All right. So I think literally in a minute, we will see, folks. Thank you, everybody, for being here. Really, really appreciate it. Let's see what happens with Robinhood. Again, I've been following the company for the past year. I think they've done an incredible job transforming the brand, execution. Vlad is a rock star. So let's see what they put up.
Yeah, qualitatively beyond numbers, I hope that they do have at least some comments on the 24-hour market, overnight trading stuff. I know that's not all their fault. There's regulator stuff. There's stuff with boats that they use as a partner. But
do you think it's some of their fault?
It might be. I'm not sure. I'd like that information.
Of their fault.
I'm not going to be quick to blame them just because I see what other brokers are going through. And it seems like, well, Schwab, I don't know. Schwab seems like it just wants to give business away to Robinhood and other brokers at this point. I don't know what they're doing.
All right. Still waiting. I'm refreshing. I should get it pretty soon.
18. Oh, 18.
We're at $18.
Yeah.
No, we're not. We're
now
down.
64.
Now it's down 3%. All right.
Now it's down a lot.
Immediately down 3%. Immediately down 3%. Waiting for the numbers. I don't have the numbers yet, but we do have a red candle. Now we're green again. We went from red to green. Now we're flat. Now we're definitely red. Now we're flat. Now we're green. Now we're flat. now we're really red.
I don't think people have the numbers yet.
I don't think anyone has the numbers yet. Still don't have the numbers. This is such a fun job. Like, just stare at a screen to see if I'm going to scream or not.
When the stock reacts like that, you're like, "Oh, it must be something really good," and it's like, "No, it's
It's just
People
algos
plan.
being
Yeah.
algos. Chat says, I'm so glad you're not colorblind. I could not do this if I was colorblind. Oh my gosh. Oh boy. Oh boy. Oh boy. Oh boy. Still don't have numbers, guys. Still don't have numbers. Wow, they're like me to my morning open. A little late.
Come on.
You know?
Put this out, Vlad. Come on.
Yeah.
Okay, 682 million. Holy fucking shit. Holy fuck. Oh my God. 682 million. EPS of 21 cents versus 15 cents. The stock's down 6%. I forget the stock right now. 682 million is the number I have on Twitter. Oh my God. Forget the stock right now. I know the stock is red, whatever.
8% beat.
That's almost 700 million. Oh my goodness, dude. I still don't have the press release. I have the exact number. 682 versus 640 of expectations. Some expectations were 630, so that's like a 50 million beat. EPS, they beat by 6 cents.
That's substantial,
40%
guys.
beat.
You sell this off, give it to me any day of the week, dude.
Yes. Dude,
give me this any day of the week.
Go down.
We got it. All right, here we go. Here we go. 40% growth quarter after quarter. Vlad did it again. He got us 40%. Vlad says, this quarter, we kept up with the pace and rapid product launches in a relentless drive to provide top value for our customers. Wow. Robinhood Gold has reached 2 million subscribers. Net deposits of 13 billion. That is 2 billion more than last quarter.
Yeah.
Last quarter was 11.2. This quarter's 13.2 billion, growing at 41%. CFO says, I'm encouraged by the progress we're making as a business. In Q2, we set new quarterly records for revenue and earnings per share as we continue to focus on delivering another year of profitable growth. All right, let me get through the numbers, then we'll keep going. Total net revenues increased 40% year over year. Transaction-based revenue 69% year over year, 327 million. Options at 182, cryptos of 81 million, up 161%. Options was up 43%. Equities of 40 million, up 60%. Net interest revenues 285 million. They beat big on that one. I thought they would come in at 250-ish, up 22% year over year, driven by growth in interest earning assets, increased securities lending activity, and higher short-term interest rates. Other revenues was $70 million, up 19% year over year, primarily due to increased gold subscriptions.
Dude, operating expenses barely grew at all.
The stock is flat right now. Again, this macro.
We'll check the outlook. Check if there's any outlook.
They don't give guidance. They don't give any guidance.
They do for the year, but not quarterly.
They do for the year? Yeah, not quarterly. Wow. Here's the next one. Investment accounts increased by 1.4 million to 24.8 million. Last quarter, holy dude, in May they had 24.1 million. This quarter they're saying 24. They added 700,000 accounts in one month. if I'm not reading that wrong, let me pull up the deck. That's a 700,000 increase in a month. Here we go. All right, we got the deck.
Saying expenses are going to be down more than 20% this year as well, while they're growing.
They guided down expenses.
Yeah.
There's no guidance, by the way, guys. No Q3 guidance. So we don't have
for operating expenses in SBC, there is.
Wow.
Yeah, they did say, as far as OpEx stuff, they're maintaining their full year 2024 outlook. So this is not growth that's coming at an extreme cost. If the market wants to sell these earnings off, we have another quarter one situation where they had a ridiculous beat. The market is dumb and it sells it off, and I will buy. So
AUC, let's go through the deck. AUC 140 billion. That beat. Net deposits. I get this number. Dude, this number is better than sex. Dude, 13.2 billion. Are you fucking kidding me? That's insane. Gold subs 2 million. They had a 300,000 quarter over quarter, 750,000 year over year. Total revenue 682. I mean, dude, it's a beat. It's a big beat. The street was already being, a little on the high end at 630. So you got 682. Operating expenses, yeah, barely up. Adjusted EBITDA, that's up 44%. And then net income, wow, 188 million. Versus 157.
If this falls much off of this might be a forward price to earnings of 20.
So this is a little confusing right here. Yes, we had 24.8 million accounts, but then this number says 24.2. Do you guys make sense of that?
Sorry, say that again.
As of Q2, we had 24.8 million investment counts, but then this number right here says 24.2.
Yeah, I think that this is a SoFi situation where they're counting on one hand new members that are coming in, and then there's some that are leaving.
We can check that at the bottom of how many have churned off. They usually post a slide on that. Here, I can get the page number.
Okay, yeah. Robinhood now is green, up 1%. But yeah, so 24.8 million accounts, so almost 25 million accounts, 24.2 investment accounts specifically. So that's the number I was referencing when I said 700,000 month over month. AUC, 140 billion. That's up because of net deposits and higher equity and crypto valuations. Retirement growth, 8 billion, 8.7. So if they had another 300 million, they would be able to say 9 billion, but 8 billion. Retirement accounts is up 300% year over year, 820,000. Assets under custody retirement is up 1,100% at 8.7 billion. And then $10,000 average per retirement account, which is up 400%.
It's a small number, that's part of it, but my goodness, congratulations, other shareholders.
Yeah, if anyone in the Robinhood company employees are watching this, congrats. I mean, this is, forget the stock right now. This is an incredible quarter. This is just relentless execution. This is incredible. You absolutely deserve all the praise here. This is amazing. 1.98 million Q2 gold subscribers. So that's up, added 300,000 over the quarter. Net deposits. Go ahead.
It's also what happened last quarter as well, right? Like the market didn't like Q1 at first. It dropped down. That's what allowed me to get in pretty nicely. And then afterwards, throughout the rest of the quarter, then it started shooting up into the $20 ranges. So the price reaction to these earnings is not bothering me at all.
Me either. Because when you get numbers like this, you hope you have cash so you can buy at the cheapest prices available. I mean, this is incredible. Net deposits, 13.2 billion. So average cumulative net deposits tend to grow over time across our funded customer cohorts. They have this in the last deck as well, basically showing that they're getting customers that are able to have higher, the velocity of what they deposit is growing as they grow higher accounts onto the platform.
This is really cool. I mean, look at the newest cohort there. It's in the upper left. It starts higher. It's the last cohort that deposited a bunch, for that match. They're continuing to deposit. The 3 quarters ago, they're continuing to deposit. I mean, like, this is just up and to the right. They can do a lot with this. My goodness.
40% year over year in revenues. 327 million transaction, 285 interest, 70 million other revenues. ARPU was 113, so that's up $9 quarter over quarter. So transaction, they made 81 million off crypto, 24 million off I believe it's the instant withdrawals and cash card. That's up 14 million quarter over quarter. That's incredible. I did not expect that. I had that as 10 million in my even bull case. 182 million off options. I think I predicted that almost. I told it, we have it on video. I said, Tanner, I think it's 175 to 180. So I got that right. And then equities is at 40. Okay, here we go. Here's net interest revenue. So credit card only made 6 million. So unchanged quarter over quarter,
which is weird.
Revenue.
I would have expected a little more. Like, how many users were on X1 before they transferred over to Robinhood?
I mean,
go ahead, Roy.
They launched this, fairly late in the quarter, and it rolled out to just a handful of individuals. So, like, we'll actually see an increase next quarter.
Yeah, I don't think it's that weird because it like maybe last month they got the 50,000. So I expect next quarter for that number to be up.
But not even that. Why? Like, if X1 was growing from 4 to 5 to 6.
Well, X1, dude, no, X1 wasn't really growing. That's why they got acquired, right, by Robinhood. I mean, so this 4, 5, 6 was very, there's nothing. $1 million is not really anything there.
And why would you be using your X1 card if you want the Robinhood Gold too? So,
yeah, I think they need a lot more users on the card to see revenue growth. So I think next quarter we see some of that. Securities lending 34 million, cash sweep 44 million, interest on cash 68 million. Margin, wow, Roy, you and I both got this wrong. Margin went up. Margin went up. Wow, it worked, dude. It worked. Lowering rates actually worked. They made it up on the volumes by providing good customer value. This is why I fucking love Vlad. He said, you know what? He's probably in his boardroom. He said, guys, let's just lower the fucking rates. Let's basically give it for free. Everyone's going to start using our shit. We're going to become more valuable. And then boom, you increase on margin 1 million quarter over quarter. That's amazing. And then 66 million on interest on corporate cash. OPEX up 14% year over year. Share count decreased by 5% year over year. We continue to anticipate dilution. No news on any buybacks yet in this deck. Maybe they'll talk about it, but no buybacks here.
The attach rate on Gold Card is mind blowing, dude. 8.2%, up from 7%. Like, I think it's going to get to that 20% mark quicker than people think.
Oh yeah, with the credit card rolling out for sure. Yeah.
Yeah. Seriously.
Okay, so final slides. GAAP net income was 188 million, 21 cents a share. We are maintaining our 2024 expense outlook of 1.8 billion, so they're really not increasing too much of their expenses, and they're doing this profitably. And now they had 5 billion in cash. There you go. Our balance sheet remains strong with 5 billion in cash. We continue to drive growth through M&A, shareholder returns, organic growth. There you go. All right. Raw thoughts. I know we're still going through the deck. Roy, your raw thoughts.
Yeah, this is another just ridiculously impressive beat. Pretty much like just quick review over it is it's all surprises to the upside. I was pretty bullish, but I was expecting actually overall revenue and net revenue to be down just a little bit from quarter one, just because crypto revenues were down. And that wasn't the case. They freaking killed it. Like even the margin, like that's a surprise. That happened about midway through quarter two. What that tells me is as margin continues to grow, like next quarter might like flat or just slightly up for margin, but like the absolutely genius move. And I did not expect a turnaround that quick. This is one amazing story, one amazing company. They just keep surprising me. Like I got into this and I was like, it's stupidly undervalued and it's a good company. Now I'm like, it's still stupidly undervalued and it's an excellent company.
Yeah, look at this, dude. So, Roy, you were right. Margins was 5 billion by June. But look at crypto. Crypto collapsed in June, 4 billion of volumes, and they still beat by 50 million on revenue when one of their highest take rate products basically collapsed in half, more than half.
That's so crazy because you can look at all of quarter two did not even equal March's notional value for crypto volumes.
Yep.
But that's a resiliency of the business. They have a lot of different ways of making money. So it's not like Robinhood back in during the COVID times.
MAUs increased by 1 million year over year. So we're back to MAUs. Now there is a decline right here, quarter over quarter, 13.7 million MAUs to 11.8. That is interesting. So as soon as I guess the June month hit where there was less volatility or less bull market sentiment, maybe we had a decrease in users, but it's up year over year. That's also really interesting because GameStop happened in May. So you would think they would surge on that number. So that one did go down month over month, but up year over year. Revenue per employee, 1.2 million. Tanner, let me get your raw thoughts and then we'll keep going on this.
I think the takeaway, or at least the most important number for me, aside from gold subscribers, which I'm really happy with, is just the overall profitability. All of their extra incentives, although be it more on the back half of the quarter, like with credit cards, we're not going to see that fully priced in. But that's if the bear case actually happens, that it's not a profit leading product. It still can be. But the overall just net income margin, the adjusted EBITDA margin, like the operating expenses are not climbing nearly as fast. And that was also the CFO last quarter that said this, that like 90% of their business is not variable expenses, fixed expenses. So that will end up going down over time. It's super exciting knowing that they can offer much lower margin rates, give extra deposit income, and that will also be seen more and more over the next quarter. But the fact that margin is actually expanding still leaves so much room for them to go. And with a very fat cash stack still, although be it they're going to do some buybacks and everything along these lines, it is exciting to know that they still have more M&A in their pocket, more expansion on maybe their engineering teams. I think that this is a smash quarter once again. It's not a Q1, but this is a good follow-up.
And I see, some comments on monthly active users. We already talked about that, but this is not the same Robinhood as it was where that was a primary concern.
Yes,
with
exactly.
Retirement accounts and people getting money off of cash sweeps, which Robinhood benefits from. Like they're making money even if somebody is not logging in that month. So that's not really a concern for me. Now, if it like just absolutely cratered, and we didn't know why. Like, I'd want an explanation, but not a concern.
Wow. So right here in Robinhood, in May, Robinhood's board of directors authorized a 1 billion share buyback, which we began executing in July 2024. So they bought back some shares in July. July, the stock was basically at 22. So they felt they were undervalued at 22. I would imagine they bought some more over the past week, just like me, when they fell to 17. 2 million gold subs. They acquired Bitstamp. 1% bonus drove over $3 billion in assets transfers from April 30th to June 20th. Customers respond to Robinhood's 1% transfer bonus by bringing over $3 billion. Dude, the net deposits, I'm still not over that. That was the one I was the most scared about. I knew it would be, at least matching last quarter, but 13.2 billion is, it's just, these numbers are not believable. Equity volumes up 50%, options 38%, crypto 137, MAUs up 9%. Retirement assets is 300 million away from being 9 billion. And then margin up 52% year over year as well.
They had a really good call as well. I can't wait to hear, some actual extra insight, not only from Vlad, but the rest of the team. Should be fun. I'm here for it.
Dude, anytime Vlad speaks, I'm just impressed. So, and I was not always that way. I mean, Tanner and I have had conversation before, and I think Ahmed and I that I was like, yeah, he's an all right CEO. No, I was wrong. So I do hope that they have better microphones this time, but just small.
Yeah, I mean, the stock is the stock, dude. But again, this is what happened last time. It's like Q1 was just like, what? Like you guys, this is Vlad's year. He knows it's his year. He knows this is his opportunity. He knows this is his chance. The whole company is mobilized around this moment. So I think they will be rewarded in due time, but you got to put up the numbers to even have a chance of being rewarded. It stock's up 3% right now. So seeing a little bit of movement there in the stock, but really, if you're long on this company, if you own shares, if you own Leaps, you have some time. I think they're doing what they needed to do. And now it's just up to Japan to not screw us.
No, what's really going to be fun, they don't do guidance, but just looking ahead at quarter 3, quarter 4, those are kind of flattish times, a little bit down from quarter 2 due to that seasonal of the Say Technologies revenue. They're going to put up some massive year-over-year beats in quarter 3 and quarter 4. I mean, maybe the stock doesn't get rewarded, but what they're doing is just ridiculous.
I agree. I agree. Hood is still up 40% year to date. Important to remember for people. I know a lot of people maybe didn't get it at $8, $9. If you got it at 13, 14, it doesn't look like it's that big of a gain, but still is up a lot. I think it was 11 to start the year. So it could go up and then lose it because it's still up a lot and the market's not willing to give them more until J-Pow cuts rates or whatever it may be. So we'll see.
Part of the reason why we're going down too is Bitcoin's just tanking. It's doing its thing. And you look at crypto volumes, crypto revenue, that's part of the story with Robinhood. But the for whatever reason, the stock is a lot more sensitive to the movement of Bitcoin than the actual revenues indicate. Now, quarter 1 proved me wrong. They made a ton of money off of it, but take advantage if you like the company, if you like the price.
I think saying that the company's up 40%, that everything is benchmarked to the S&P is I don't think that's the right way of looking at this right now. Oh, look how much it's gone up versus other, stocks. Look at net deposits year over year. It's up 40%. The bloodline of this business is growing at the speed at which the stock is going right now, at least. So I think that there's a lot more room to grow. I don't think actually that if it did run to 20 or something like this, that there would be a pullback, or that there doesn't need to be a pullback tomorrow.
Yeah. Let's get CNBC's reaction to it.
Across the board for Robinhood. Also saw record deposits in the quarter. EPS, let's start with that number, beat by 6 cents, 21 cents adjusted. That was on revenue of $682 million. Also a beat. And then customer accounts basically in line. Average revenue per user came in stronger than expected. That was $113 versus 105 expected. They're only giving, operating expense guidance, no EPS or revenue guidance. Transaction-based revenue was up 69% year over year, driven primarily by options revenue, 43% jump there. Crypto revenue, this looks like a big number, up 161% from last year, but it was flat sequentially or from the prior quarter. Equities making up the smallest piece of the pie for Robinhood, So 40 million, that was up about 60%. And then deposits, this is key, hit a record of 13.2 billion, and then annualized growth there of 41%. I did speak to CFO Jason Warnick, who said, quote, "We are continuing to take assets," he says, "from every major brokerage firm." Says customers are continuing to respond to the value proposition at Robinhood. Companies saw $3 billion or so in asset transfers, so averaging $130,000 per customer. So that bigger number indicates higher net worth customers. Also talked about rising rates being what he called a, quote, natural hedge, meaning that as asset valuations go up, it tends to mean more trading activity despite what we're seeing in the rate environment. Also asked about some of the trading outages we saw this week. He said he would not signal any type of impact on revenue, guys. Back to you.
All right, okay.
All right, we got Vlad. Let's hear from him.
Hi, everyone. Vlad here, CEO and co-founder of Robinhood Markets. We just released our Q2 2024 earnings results, and here's a few highlights from the strong quarter. First, financial results. In Q2, we had record total net revenues of $682 million. This is up 40% year over year, and we set a record for GAAP diluted EPS with 21 cents. Second, our strategy is resonating with customers, and it's driving great business results. We increased our market share of retail trading yet again, leading to year-over-year growth in equity, option, and crypto volumes. Net deposits. They were a record at over $13 billion, including net positive transfers from every major incumbent brokerage firm. And in May, we introduced the lowest margin rates available in the industry for our active traders. Since then, margin balances grew to $5 billion in Q2, the highest we've seen in 2 years. And third, we continue to add value to Robinhood Gold, which reached a record 2 million subscribers. Our 1% unlimited deposit boost for Gold customers also went live in Q2. And we started rolling out the Gold credit card, which offers 3% cash back across the board. So far, it's gotten incredible feedback from customers. In the App Store, it has a 5.0 rating with over 7,000 five-star reviews. We have a lot more to share, so check out our press release and earnings call at investors.robinhood.com. We're excited about the momentum we built in Q2, and we're just getting started. Thank you.
See that walk off? That's not AI. AI can't walk off. You see that?
AI can't walk off.
AI can't walk off, right? Is AI that good? No, I like this. I like that they're doing this every quarter. They're becoming a more mature company. The CEO speaking right after they release the results. Yeah, the stock is the stock, dude, but it's just an incredible quarter. Just an incredible quarter. Up 1.58% right now. Let's get Dan Dolev. He's a analyst on Robinhood. Let's get his quick thoughts on the company as well and see what
It's a figure robot in a Vlad skin.
He did not talk slow, dude. I don't think he was talking slow. I thought he was talking pretty fast. We have this thing in the morning where I was like, you can't trust people that talk slow. I think that was pretty fast. I don't think that was slow. There we go.
This week, how does it speak to this business model that Robinhood is building out? Is it a black eye on credibility, on reputation, especially at a time where they are continuing to take on market share?
No, it's a great question. Look, if you go back 2 years, the issue with, Roaring Kitty and everything that happened, they survived it. They improved their, internal processes, and they came out strong. So I think this was like a 24-ish hour outage. It was done. It was, I think, just 1 day. And now they're back in business, and this is not happening again. So I think that they're learning from their mistakes, and they're getting better over time. So I'm not worried about it as a lingering issue.
Okay. Toast also reported on overtime.
Okay. We got about 30 minutes until the call, so we'll keep breaking down what we see right here. Roy, what do you think of him putting out this little video? Do you think it's a good thing for them to do now?
Yeah, it reminds me a little bit of what Alex Karp does with his letter, but Vlad is very personable, and he's just because of some, old GameStop stuff, there's a little bit of taint there. So it's nice that he's doing that sort of thing. I love that, you're getting to interview him, hopefully on a quarterly basis. So if that's already set up, Vlad, hook the guy up. Yeah, it's a nice touch. By the way, you're on that screen. Stay right there. Net deposits. That as looking at that as very exciting. We have June's number. So April is when that big 3% match for retirement accounts that are rolling over ended. We had some accounts that still were going through that in May. and they honored it. They were grandfathered in. And so one of those concerns, and yes, we have the 1% everything match, but I was like, we might not be up that much. 4.7 billion is a really nice number. That's more than I was expecting. So very good sign of what's to come, because that 1% match is not going away.
Yeah, I didn't expect that either. My only concern about this is they haven't done the 1% brokerage match in July, and it doesn't look like they're doing it in August. So do you think they expect the gold match that exists already on your phone without having to do a full brokerage transfer, it's enough to match these same deposit levels? Because if they're not doing a full brokerage transfer, then, you're not getting a ton of Schwab or Fidelity accounts.
I mean, you're getting some of those anyway, just because Schwab has had so many issues. Fidelity is a little bit better. So, and they're hitting the right vector. Like, this is one of those things where I didn't see it in the slide deck, and that's fine that they don't need to bring it up every single time. But they're hitting people that are millennials and zennials as they're into their earnings curve. And so those folks will continue to increase their earnings power. Recession might bring it a little bit down, but they're going to really benefit from that. Versus, there's some people that are like 60, 55, whatever. They're not moving off of Schwab or Fidelity, but that's not really who they need to go after unless they do a big match bonus.
Well, one of the things that they did say in their last quarter, but I don't think they said it in the earnings presentation, was the size of the accounts that came from those brokerage transfers were so much larger than their average accounts, right? Because now they have retirement, now they have pretty competitive, gold offerings. So I think we'll just have to wait for the call to see if people are still flooding in via, Schwab or these sort of things at higher and higher sizes. That'll be very interesting. Stock's absolutely flat.
Yeah, dude, it's funny. Like it's like, because the market just tanked at like 359, at least the market's like green on Robinhood by 3 cents. But like, imagine, if the numbers were kind of bad, this thing would be back to 14. Like, it's a really volatile market that we have right now.
Well, what's also interesting too, can you go back to the presentation? Go to page 12.
Okay. Page 12.
It's the average cumulative. Yeah. Not only is the most recent quarter looking amazing, but even like, Q1 is not slowing down. It's continuously coming up. And if we even look at almost nearly every other cohort, they're all starting in the last 2 quarters, starting to ramp up now as well. So staying decently flat through this period of, bad markets, not decreasing, just staying flat. And then in a period where people think that they can make additional money in equity markets, that, the amount of money that they're keeping on the platform is even higher. So, yeah, I think that this is very exciting. If you believe that deposits are their blood, which it is.
Yeah.
Yeah, I think everyone kind of recognizes in the chat. I mean, we're all semi-smart people here. Like, we understand 40% revenue growth for any company is not easy to do, especially if you're a public company and, you're a relatively big company. So 40% revenue growth is phenomenal. Any other macro, the street would, lose their minds to buy the stock after hours. But we're in a different macro.
As far as a 40% revenue growth, like it's particularly impressive because their operation expenses are flat. They're controlling those extremely well. They're being cost conscious. I mean, like even the float is smaller than it was a year ago. This is like one of those Goldilocks scenarios where you have just everything firing right. So,
yeah, it's one of those things where it's like it's impressive growth. It's their thesis starting to play out in an effective way. And we see that with ARPU. We see that with revenues, other revenues. This number in Q2. So for people wondering why it spiked in Q2, that's primarily because they bought a company called Say Technologies that has proxy revenue for, it basically creates technology that allows companies to hold shareholder meetings. That always spikes in Q2 every year. As you can see, last year, it was at 59 million versus 35 million the previous quarter. And this quarter, it was at 70 million. So up from 35 million. So that doubled. I would assume that's going to happen again next Q2, but Q3, that's not going to be there. So I guess, Roy, tell me, how do you think the street's going to guide for Q3? Volatility is good for Robinhood, but if people stop trading up and buying calls, that might hurt. So how do you think the street is thinking of Q3?
Yeah, quarter three will be a little bit softer for a couple of reasons. One is that they are not burning cash, but that cash pile is getting a little bit smaller at the same time that rates are likely to decrease. So the yield that they're getting on their existing cash might go down. I'm really actually in credit cards, revenue will actually increase that and offset that, but not by as much as we're thinking. Margins, I think, will be kind of flat-ish, maybe slightly up. But the real question is what the market does. Now, the thing is, the options contracts are continuing to be traded at an extremely high level. We don't know what that looks like for Robinhood as far as what's happening in the current quarter or the last quarter. We'll actually find out soon. I think that they announced July's numbers next week or in a week and a half. So we'll find out soon enough, but that's going to offset some of that. I would guess that they will, again, be a little bit more conservative, but so the net revenue and the overall revenue for quarter two will actually go down a little bit for quarter three, but the year over year is going to look really, really good.
Yeah, what I think is going to happen, dude, is for those that are wondering why the market's down, we had a 10-year bond auction that didn't go that well. I don't think it's the biggest deal in the world. I think the market will digest that, but that's what immediately kind of turned the markets at 1:30ish, 2 p.m. I think if we see a reversal of that and we see Japan continue to lighten up like they did last night, and in general, you just see equity start going higher. You get good CPI data next week where we have a two-handle. It becomes obvious we're going to have a rate cut, maybe 50 basis points. All the stocks that were aggressively sold off and had monster earnings, they're not, the market's going to look at them and be like, all right, it's time to do what we need to do. And so if that's the case, maybe this takes some time, but I do think these numbers justify stock movement as well.
I also think if the interest on their cash that they're holding ends up going down, they're also going to end up making more transaction revenue.
Correct.
Potentially.
Correct. Yeah.
So, if the risk-free rate is not as juicy, then people will look to add on a little bit of risk because it'll be worth the squeeze. So, yeah, Robinhood also benefits. And I think that they are way more diversified than they've ever been, including that base of gold subscribers and retirement that's just not going to leave. And like we saw from the comment, if there are long-term investors in this chat, the 18-year-old who signs up and is looking for a new brokerage is not going with their parents' brokerage. That just isn't happening anymore. They're going to a much more modern provider that has a very easy way for them to get started in investing in a couple clicks. And as well, the old generation dies off and they are the richest generation, and that transfer of wealth goes down to their kids and their kids' kids. So the amount of tailwinds long-term for Robinhood, it's so in their favor, in my opinion, that they brush off a lot of this macro because just overall they get benefits from the size of their business growing because that's what the market wants.
Oh, yeah. I mean, like Monday, the volumes were just insane and ridiculous. Days like that benefit Robinhood. It's not a fun thing to ride through, but when it sold Robinhood off down nearly to $14, I'm like, this is just stupid. This is a debt-free company that has $5 billion in assets and cash that's growing rapidly. Okay.
I agree.
Some people in the chat are saying this whole wealth transfer thing is fake, either because of probate or because kids are going to end up blowing the money. You don't know that at all. One, the probate thing is absolutely false. Okay, sure, there'll be a percentage that ends up going to taxes. And then also, people do invest large quantities of money. We're not talking about a $20,000 transfer or something like this. We're talking about 20 million, 20 billion, 20 trillion, not 20 trillion to any individual family, but I think the overall wealth transfer now, the number's up to $80 billion. Sorry, $80 trillion.
And young people tend to not just say, I'm going to put that $20 million in a high yield savings account. They'll be a little bit more aggressive with that, especially because they have time putting it in equities and crypto as well.
Yeah. And I think the other thing is, look, I mean, if somehow my parents had $100,000 and they just gave it to me, I'm not going to Schwab or Fidelity to put that money. It's just, it's like, You're going to platforms that you're more, whether it's Coinbase, Robinhood, you're going to more user-friendly, modern platforms. And they're going to benefit from a lot of that cash. Let's talk about the credit card. So we want to definitely hear guidance from them on the card. Tanner, I know you have lots to say. Let's go to Roy. Roy, what is your bull and bear case for this credit card that they're doing?
The bull case is they make a tiny bit of money on it. They end up mitigating the risk in the way that they lend it out, but it helps grow gold membership substantially. So they're actually benefiting in that way. And it leads to the flywheel effect where people are like, they just came on, got the gold membership simply for the credit card. And they're like, you know what? I've got these rewards right here. Why don't I open up a brokerage account and just put that in right here? And then they start adding their assets. They like the user interface. They see the other products that Robinhood has as well. And they say, you know what? I'm going to go ahead and transfer my retirement over. They have this 1% match. And so Robinhood grows their assets under custody extremely rapidly as a result of this. Now, the bear case is they don't mitigate risk. They approach credit cards and have a disaster similar to what SoFi has had with their credit card. And I think that really could happen. That's a realistic risk. That'll start hitting next year if that's the case, where they give out too much too fast. The benefits are too good. And then in that scenario, I don't think they're just going to eat the loss. I think they'll just have to cut the rewards and then cut back on who they actually lend to. And maybe just not feature it as much, but it'll be a little bit of a drag on the company and the stock for, a couple of years. That's not going to kill the company. I mean, it could, but that's very unrealistic. So those are the most realistic bull and bear cases that I can give you.
Tanner? I do think that the interest rate on the card does get cut. I think it'll go down to like a 2% card eventually. It might stay there for 2 years. Who knows? But I think that Roy's being very nice on that's the potential bear case, is that they're going to make money. The real bear case is that they lose a shit ton of money. I'm
in agreement with that. Like it absolutely could be a huge drag on that. Like they could be losing $100 million over the course of a year or more.
So one thing that is important for credit cards is that every single time that you tap your card, you do make interchange fee that is split between the issuing bank, the actual card scheme like Visa or MasterCard, and then Robinhood is also going to get a little feature of that, and so is the company that might be providing the program. So, like, there's lots of money to go around. What is Robinhood's cut of that will probably be around 1.8%, and they're giving away 3%. Okay, that is a super negative. So if people pay back their credit cards, it's an instant loss from them. And this could be at the factor of like millions and millions and millions of dollars that flow through their system. So what they're banking on is, 1, people sign up for gold, but that's not going to be nearly enough. And then 2, they're also going to need a percentage of people that do not pay their card back. They are charged interest, and then they do pay it back. Because another thing is that if they get charged interest and then they don't pay it back, well, then it's even worse. Because not only did you lose on the interchange fee, you also lost on someone taking Robinhood's money, like, just completely. And that does happen. That actually happens a lot. So that's just my big concern with Robinhood's credit card, is that they're a team that historically has 0 credit history. And up until this point, every single product that they've had has been accretive to their business with little to no downside. So if you buy a stock, they make money. If you sell a stock, they make money. You add on gold, where you kind of lose out is margin. There's a slight amount where people are going to default on margin, and then even the underlying collateral, which is your shares, continue to crash before Robinhood even has a chance to sell them. And so they're going to end up losing. Credit cards are completely unsecured. So meaning if someone defaults, that's just money that's gone. It's just lost into the abyss. So this is an environment they've never been in.
Yeah, so I agree. I actually talked to a guy who works in the credit card industry a month ago, and he likes Robinhood as well. So we did a whole financial model, and we were pretty conservative with our estimates. They're going to lose money for years 1 and 2. And year 3 is when they should start actually either breaking even or making a profit. CFO Jason Warnick also said they're probably going to lose money for a bit. I think they have a master plan here, and the master plan is oriented around user experience. It's pretty ambitious to do 3% cash back across the board. I understand Tanner's argument of them lowering that. I don't think they will. I think the optics of lowering that is going to look bad. They could blame, well, the Fed lowered interest rates, but you could say that for the APY. For the cash back, I think that's a tougher sell, especially when people are going to you over everybody just for that extra 0.5% on 3%. So I think they have a lot of smart Stanford math guys trying to figure out, how do we maneuver the business to create such a phenomenal user experience that people go with us for when it comes to credit. And as a result of them going for us, we make money on the back end, whether it's through deposits, gold subscriptions, overall trading, because they now are integrated into our product. Maybe we give them a mortgage, as Roy was talking about, different programs, and we really build out gold. I think the gold credit card is just one part of a very long-term business. Vlad has said he wants to be your entire financial ecosystem. And to get people into that, credit card is a big part of it, but you can monetize in other ways besides just the loss leader on the card. So I think they're going to find a way, but it will take a few years to figure out how exactly they're making money on the card.
I just want to state, I don't know if people are going to counter me here, but I would say every single bank and credit team out there is made up of Stanford math geniuses. That's all they do. It's all math. So I don't think that that's unique to Robinhood. And in fact, I actually think they're on their back foot because it's a very new team.
So I would disagree on that. The team is X1. And if you heard Vlad talk about X1, they're all Stanford math engineers. That's the only reason Robinhood acquired them, because Vlad's also a Stanford math guy, right? So there was a lot of synergies. X1 was one of the most phenomenal credit card products ever. The problem is 2022 happened, right? And all fintechs kind of shit the bed. Klarna went from 46 billion to 5 billion. So Robinhood got them cheap on the acquisition. I think there's a special product there and a special team in terms of how they understand this. And I think a lot of the other products that have credit cards, they don't have a user experience like Robinhood that has a brokerage that immediately lets you take the 3% cash back you get and just slide one button and throw it into your brokerage. So I don't know. I think there's different innovations there, but is it risky? Yeah, it's obviously very risky if we get defaults, delinquencies, etc.
But it's kind of a tough situation because, on one hand, as an investor, I want them to be cautious in the amounts that they're actually getting out. And it doesn't seem like that's the case, and cautious in the rollout. But there's also frustration where people have signed up and they're like, where's my freaking card? They have Diego Cerruti, that's from Nubank, and of course was part of X1 during the acquisition, that is probably advising caution. Nubank has handled credit, especially when it's in environments where there's no credit score, very, very well. And X1 did well under that as well. But
which Robinhood is not following the strategy that they did.
It doesn't seem that they're following it. And that's a concern. But I mean, that's one of the reasons why I have Leaps only. I bought Leaps last May. I continue to hold. I've sold, a number of those because you have to take profits with that. I'm out in January, unless, this really tanks to 14, in which case I'm in as a long-term shareholder at that point, because it's stupid and silly. This is still a good price for me, but there's risk next year just because of the credit card platform. So hopefully they talk about that a little bit. There also, I noticed that there wasn't much mention in the earnings other than just like we're expanding, but no measures or anything internationally. So I'm kind of curious how that's going with the UK. As far as the monthly active users, I'm guessing just because they don't have the SIPs and the certain types of investing platforms yet, that there's not as much interest as we would hope as investors.
Calls in 10 minutes, and I agree with both of you. So that credit card, we're going to need to get a lot more clarity, and hopefully we will on this call. And hopefully they show further growth over the next few quarters with the credit card. I think you guys will appreciate this slide. So customer match amortization detail. This is how they're paying out all the matches on the 1% deposit match. Through Q2 2024, we have provided customers with 250 million in matches on 13 billion of asset transfers and retirement account contributions, including 140 million in matches on 6 billion of asset transfers and retirement account contributions in Q2. So they put up 13 billion in deposits. 6 out of that 13 billion was brokerage transfers, asset transfers that they have to give a match on, which includes 140 million. In the first half of 2024, we amortized 19 million of these matches, including 13 million in Q2. The remaining 230 million of those matches on retirement accounts, contributions, and asset transfers have an average amortization period of over 4 years. As of Q2 2024, $23 million in gold deposit boosts, this is the little 1% you get when you deposit, are scheduled to be paid out over 24 months if the deposits remain at Robinhood. That means in Q2, they brought in 2.3 billion in deposits, because 1% of that is 23 million that they're paying over the next 24 months. Tanner, your thoughts on this idea of you deposit and then you get a 1% match, but that 1% is paid over 2 years?
Yeah. What was the math that he said? They're going to make roughly 2%.
2% yield. The revenue is a yield of 2% on AUC, assets under
and they're going to charge about 1%, but amortized over 2 years, so about 0.5%, let's say, if you want to look at it that way. I think it's really positive, and obviously, going back to the old Jeff Bezos quote, like, your margin is my opportunity. There's a ton of money in the financial services area and in brokerage that want to keep their extremely high rates and do not have the flexibility that Robin has to put out these sort of products, because they have dividend investors and buyback programs that are expected from investors, and the people that are running those companies are not the founders. So they're there for the paycheck. They're not there for the legacy. Vlad is very different, right? He's here to build a generational company and will make the necessary steps in order to win over clients, not just profitability. But the profitability will always follow. So, I think that it's smart, and it really puts, Schwab and Fidelity and all these other large brokerages, like, putting their feet on the fire. So, yeah, they're doing what they have to do.
Roy, your thoughts on amortizing some of these payments over 24 months?
I mean, if they didn't do that, it would look like this company was dying. So when you grow that aggressively, you just have to. It's absolutely the right thing to do. I was curious when they were announcing these features, like, how they would actually handle that, and thinking, I think this was back in Q1, like, that they would absolutely, during Q1 before Q4 earnings, that's what it was, that they would absolutely potentially tank if they didn't do this. But I'm like, surely they're not going to just take that on the chin, but they would amortize it instead. And they did. And I've been on the other side of this too. Like, if the people that bring the money into the platform leave, they lose that bonus as well. And so I have a scenario where it's no longer the case, but I was working on buying another car, had to sell just a little bit of stock, ended up pulling out some money from the account. And when I started re-adding stock, no match. It let me know, like, hey, you withdrew this amount. Until you get back to this amount, we're not going to start matching that again. So no double dipping. So smart. It's well communicated. And I haven't seen anybody, like, really frustrated. I thought that there would be some people that would be really upset that they're not getting the 1% instantly. But I haven't really seen that to be the case. So
Cactus Jack has a thing that I wouldn't imagine that's the case if it's staying on platform, but does anyone know if that's true?
So he says one BS part is them taking back the match if you transfer in crypto and sell it. So if I bring in my Bitcoin and sell it, they treat that as me cashing out my cash deposits. And I've heard some concerns like this. Honestly, I have to research more about people, like, depositing crypto, 1% match, yada yada. There might be an issue there where they kind of don't treat it as a cash deposit. But I think for the majority of people, that are just putting in $1,000 a month, they want that 1% match, and Robinhood doesn't have to give it to them all at once. You give it to them over 24 months. It keeps you investing in the platform, and it keeps you from taking money off the platform. There's at least an incentive there to just keep it on the platform, and companies have to get really creative to get people to just keep their money there. And I think that's what Robinhood's doing.
Someone in your chat said,
go ahead.
Sorry, go ahead. I was just going to say, someone in your chat said no credit card company loses money. That is so false.
That is not correct.
There are credit card companies today that are surviving and losing shit tons of money. SoFi, I'm a Super Bowl of that company.
Built Rewards is losing money.
Yeah.
Goldman
SoFi
Sachs, Apple. Apple lost a ton, or Goldman Sachs did.
Yep.
It's dangerous, guys. Like even smart companies that do well, you can make a ton, you can lose a ton. It's volatile. There's only upside short term, but long term, there's some risk. Hopefully they manage that well.
Yeah, you got to be able to do this right. And when I asked Vlad about it, when I interviewed him in February, he kind of said, yeah, one thing he did say is like a lot of people assume things. A lot of people, I mean, dude, this is how I know the asymmetry is on my side here on Robinhood. A lot of people still think the GameStop thing is the biggest issue in the world. They think Vlad is a liar. He's the worst person. They think Robinhood's unprofitable, you know? I mean, like there's so many different things they think. And they're like, there's no way they could be giving away all this money for free. I'm like, well, I did a whole interview with the guy. Like, I'll give you the 2-minute clip where he says exactly how they're able to remain profitable, but still give you a 1% match. But people don't want to hear it. So I think when it comes to the credit card, there's a lot of assumptions. Ultimately, they have to show a couple quarters of what it looks like. And I think we'll get that over the next 2-3 quarters. And then we'll know what the credit card business really looks like. Okay, so we got 4 minutes to the call. Real quick, let's just look at some other stocks before the call. So we had Warner Brothers Discovery. I don't have the numbers yet, but let's just look at the stock. Warner Brothers down 8%. Okay, that one has a lot of debt. So some issues there. Duolingo, they reported Duolingo up 4%. Okay.
Isn't that a big name for you, Roy?
I don't hold it. It's one of those where I knew it was awesome. I didn't even think of it as a stock to invest in.
Okay.
And that sucks.
Monster down 9%. Monster and Celsius both were getting re-rated by the market. Maybe some growth slowdown there. Beyond Meat, BYND, that's up 5%. Okay. Those are really the big names.
Do you want a 2-minute summary on the Upstart?
Yeah, please. What happened with Upstart? Why did they do so well?
So maybe just quickly, Upstart is not a bank. They're not a SoFi competitor per se. They are an AI play. They try to underwrite users better than traditional FICO score style of underwriting. That's the whole idea. And banks will buy loans off of them or help them underwrite loans. That's essentially the business. They're the AI, fintech. So,
and real quick, Tanner, before we continue, guys, Roy's going to have to leave when the call starts. Please make sure to follow him. His link is right there in the chat. He's a great analyst on fintech, Robinhood, Palantir, et cetera. So please make sure to follow him. Go ahead, Tanner.
Good to see you, Roy. We'll talk soon.
I'm here for 2 more minutes, but yeah.
Okay, cool. Upstart, however, is the ultimate play on rates. Okay. Whenever rates start to come down, that means that personal loans and other loan products are going to be more profitable for banks. And so would they rather do their own underwriting, or would they rather an AI company service those loans for them? Well, they would want Upstart to do that. So we're seeing sort of a convergence of two things. One, the macro is a massive, unbelievably massive tailwind for Upstart, and that they posted good outlook or good guidance, but not like they said, we are not including any sort of rate cut at all. So if there is a rate cut, that's an extreme tailwind for them. Secondly, they also had about 30% short interest on their business going into on their stock going into this earnings call. So we're seeing a bit of a short squeeze and a bit of great outlook on the company. I said this before the company even released earnings. Forget about the numbers that you're looking at here. It's all about the numbers that you're going to see in previous quarters. The coolest thing about Upstart, they can do negative in revenue this quarter, and they could do 10x, 20x in revenue the next. And they've done it before. So it's one of those names that's very interesting to watch. And that's why you're seeing it up nearly 50% at one point today.
Yeah, I mean, look, and I think when rates come down, I think, Tanner, you would agree that would help them, obviously.
Yeah. Let's get into this call.
All right, we got the call. We'll be starting in probably 30 seconds. Roy, thank you again, guys. His Twitter will be in the description, in the chat. Please make sure to follow him. Roy, thank you so much. We'll see you next time.
Later, guys.
See ya. All right, folks. We should be starting in just a little bit. And let me also put Tanner's Twitter in the chat. So
Oh my gosh, you got to mute this music though.
You got to mute it. If you are on my side of Twitter or my side of my YouTube stream, please make sure to follow Tanner as well.
Do you play that music a lot? Do you get your videos taken down?
No, it actually doesn't affect the videos. Okay, I think we're live.
Thank you for standing by and welcome to Robinhood's second quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. To remove yourself from the queue, please press star 11 again. I would now like to hand the call over to Chris Cagle, VP of Corporate FP&A and Investor Relations. Please go ahead.
Thank you, Latif, and thank you to everyone for joining Robinhood's Q2 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I just want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks, Chris. Hi, everyone. Let me start with the three things Robinhood is focused on. Number one, winning the active trader market. Number two, increasing wallet share with our customers. And number three, expanding internationally. We're making progress across all three of these. And in Q2, we delivered another quarter of strong outcomes and several financial records. More specifically, our retail trading market share continued to increase, leading to year-over-year growth in equity, option, and crypto volumes. Net deposits were a new record of $13 billion in the quarter, translating to a 41% annualized growth rate. With $11 billion in Q1, we've already exceeded our long-term annual target of 20% plus, and we're only halfway through the year. Gold subscribers reached a record 2 million, which is over 60% year-over-year growth, and now over 8% of funded customers are Gold members. And these results, combined with continued expense discipline, drove 40% year-over-year revenue growth to a record $682 million, as well as record EPS of 21 cents. There's still so much to do, so we're not slowing down. On the active trader front, we've been consistently growing our market share among equities and options. But until recently, one area where candidly our progress has not been so great is margin. And this is a huge opportunity for us as brokerage incumbents generate far more revenue on margin than even trading. In particular, we were not getting much adoption from customers with larger margin balances because our rates were not very competitive. So we introduced industry-leading rates for active traders in May. And this, coupled with the continued improvements we're making to the accounts transfers flow, led margin balances to grow by over 20% in the last 5 weeks of the quarter to a 2-year high of $5 billion. Now, 75% of that growth came from customers with margin balances over 100K. So we're really pleased with the progress we're making on margin with our large active customers. And we're continuing to see strong margin balance growth in Q3. Finally, we're nowhere close to being done building for active traders. There's plenty more coming, including our inaugural Hood Summit in October. We had a lot of positive feedback from our Gold event in March, so we decided to host a special event just for our active traders. And this will be much bigger than the Gold event. We'll be launching some awesome new products that we can't wait to tell you about. Now, let me turn it over to Jason to review our financial results, and then I'll offer some additional thoughts.
Thanks, Vlad. It's good to speak with everyone today. As we discussed last quarter, we are focused on driving another year of profitable growth, and in Q2, we continue to make good progress. We drove new highs in revenues, adjusted EBITDA, net income, and GAAP EPS in Q2. Compared to a year ago, total net revenues grew 40%, to $682 million. Adjusted EBITDA roughly doubled to $301 million. Incremental margins were 77%. Adjusted EBITDA margins expanded by 13 points to 44% as we make progress over time towards the 50% plus levels, comparable to what we see from incumbent brokerage firms. And net income was $188 million, or 21 cents per share, up 7 times from a year ago. And taking a look at the past year, it's great to see how a number of strong quarters came together. For the last 12 months, revenues were over $2.2 billion, and adjusted EBITDA was over $800 million, both new highs. We're pleased with these results as we aim to continue delivering profitable growth in 2024. Now let's move to Q2 business results. Assets under custody finished Q2 at a record $140 billion, up 57% year over year. A key driver of that asset growth was record Q2 net deposits of over $13 billion, which translates to a 41% annualized growth rate. It's also great to see how assets continue to diversify. Retirement AUC was nearly $9 billion in Q2, more than doubling from last quarter. And cash sweep balances were a record $21 billion in Q2, up 76% year over year. We're also driving growth in Robinhood Gold, which continues to deliver value to both our customers and our shareholders. As a reminder, Gold subscribers, on average, are 7 times larger than our customers overall, have been growing net deposits twice as fast, and adopt products at higher rates, leading to Gold ARPU that is over 7 times our customer average. In Q2, we grew Gold subscribers to 2 million, up over 60% year over year. This represents an adoption rate of 8.2% of customers, up from 5.3% a year ago. We are excited to see continued momentum in our Gold program, which now includes annualized recurring subscription revenue of over $100 million. Now let's turn to our financial results, starting with Q2 revenues compared to last quarter. Transaction-based revenues were roughly flat as equities and options increased while crypto revenues declined with industry volumes. Net interest revenues grew due to higher securities lending activity and higher interest-earning asset balances. And other revenues increased, driven by proxy seasonality and continued growth in Robinhood Gold. Turning to second quarter expenses, combined adjusted OPEX and SBC was $493 million in Q2. This includes increased employee bonus accruals given the strong start we've had to the year, as well as some costs related to our 2 recently announced acquisitions, Bitstamp and Pluto. All in, through the first half of the year, our expenses are on track with the middle of our full-year outlook range of $1.85 to $1.95 billion. So we're keeping our outlook unchanged, and we'll continue actively managing our expenses based on the returns we see on our growth investments, as well as the macro environment. Before I pass the call back to Vlad, I want to share some perspectives about how we are thinking about capital deployment. When we think about capital allocation, our primary objective is to maximize earnings and free cash flow per share over time. We do this by allocating capital to organic growth and M&A to drive earnings and free cash flow higher, and we complement that with share repurchases that can increase the value per share. And in Q2, we made good progress. First, we continued to invest in organic growth in areas like product development, marketing, and customer matches. We have a lot of momentum, and I like the economics we're driving. Second, we announced 2 acquisitions. In June, we signed an agreement to acquire Bitstamp, a global crypto exchange. We believe it will accelerate our crypto roadmap, enabling us to serve a broader user base, enhance our capabilities, and provide additional liquidity for crypto trading. Additionally, we acquired Pluto to help us move even faster in AI and advisory. We're excited to share more as we make progress here. And finally, we announced a $1 billion share repurchase authorization, which we started executing in July and currently expect to execute over a 2 to 3 year period. This timeline could vary depending on market conditions and other capital allocation opportunities. Looking ahead, we believe we are well positioned to drive higher earnings and free cash flow per share over time, driven by our 20% plus net deposit growth, naturally hedged business model, and 90% fixed cost base. And we have a lot of momentum entering the second half of the year as our business is having a great start to Q3. As context, June was a strong month with nearly record options volume, close to a 24-month high for equities volume, and over $4 billion of net deposits. And in July, trading volumes were more than 20% higher than June across equities, options, and crypto. And net deposits were again over $4 billion. While August is just getting started, so far it looks a lot like July, including over $1 billion of net deposits in the first week of August. With that, I'll turn the call back to Vlad.
Thanks, Jason. As I said earlier, the second part of our strategy is increasing wallet share with customers, including growing Robinhood Gold subscriptions, which hit an all-time high in Q2. And we've been busy rolling out additional value for Robinhood Gold customers, including a 1% unlimited deposit boost and a new Gold credit card with 3% cash back. Now, I've talked before about how we've been seeing the flywheel accelerate, and I thought I would explain in a little bit more detail how it works. So here it goes. First, our Gold members receive industry-leading economics and a world-class customer experience across all of our products and services. This leads to double the net deposit growth and higher multi-product adoption, including retirement adoption that's 5 times that of average customers. And as the flywheel spins, it leads to greater customer loyalty and ARPU that's over 7 times that of our average customer. And this leads to faster Gold member growth at a better ROI. The different components of the flywheel are self-reinforcing, leading to higher customer satisfaction, higher revenues, and greater diversification for our business over time. So we had a strong Q2, and you should know our team's been working incredibly hard to deliver even more value to our customers. Roadmap is full. There's so much to do. Now let's move to questions.
Thank you, Vlad. For the Q&A session, we'll start by answering the top few shareholder questions from Say Technologies, ranked by number of votes. We passed over questions that have already been answered on this call or in prior quarters and grouped together questions that shared a common theme. After the Say questions, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. The first question is, when are you rolling out the credit cards?
Thank you, and thanks to Chandler, the question asker. So we started rolling out the credit card a few months ago, and we recently announced that we've crossed 50,000 cardholders. And we recognize the demand for the credit card is high, and the feedback that we've gotten so far from customers is also very, very positive. People love the card. Customers love the rewards. They love everything about it. The in-app experience, the digital experience, the card itself. The app so far has a 5.0 rating on the App Store with over 7,000 reviews. So there's a lot of demand to roll it out faster. Just to set the context, if you compare the rollout of our credit card with other successful card programs in the past, we're kind of right on track, rolling it out at the same rate roughly in year one. And these programs tend to start off a little bit more slowly as the unit economics are validated and the customer activity around borrowing and spending is validated as well. So we recognize that there's a ton of demand. Part of that is also because people are seeing the card in the wild and seeing the positive reviews. And we want to fill that demand, but we're going to be prudent and make sure we do it while carefully managing the risks of any new business.
All right. Thank you, Vlad. The next question asks, can we get more information on the AI company that you just acquired?
Yeah, absolutely. I'll take this one as well. We're really excited about Pluto. They're an AI-powered investment research platform, and the team is really, really great. And in terms of what we plan to do with the team and the technology, we think they can help us accelerate the work we're doing, both in AI and in advisory. And we've got some really good stuff in the works there. So stay tuned.
All right. Thank you, Vlad. And then the last question from Say, do you ever plan on releasing a desktop version of Robinhood with more in-depth chart analysis capabilities?
Yes. As a matter of fact, this is one of the top things that we've been focused on this year. And we've been actually making sure that the platform is very, very good. I've seen some demos of it, and the demos are looking great. And I think it's going to be an amazing product that customers will love. So stay tuned. We can't wait to share it with you guys.
All right. Thanks, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason and look forward to more next quarter. Now I'll turn the call back over to Latif to lead Q&A from our analysts.
Thank you. As a reminder, to ask a question, you will need to press star 11 on your telephone. To remove yourself from the queue, you may press star 11 again. We ask that you please limit yourself to one question and then re-queue. Please stand by while we compile the Q&A roster. Our first question comes from the line of Dan Dolev of Mizuho.
Hey, Vlad. Hey, guys. Really good results here. Hey, really amazing results here as always. I want to know about all the growth you're seeing in the 24-hour markets. And can you give me some color on the outage from earlier this week? Because we've got a lot of questions about it. Thank you, and great stuff.
Yeah, I'll field that one. And thank you, Dan. So about 24-hour market, I first want to say that with this product, we're on the bleeding edge of technology in trading. This product is not commonly available with such a large instrument base to customers. And with any new product, there's sometimes things don't go exactly right. In this particular case, the third-party ATS that we route orders to, which is called Blue Ocean ATS, had some technology issues. They couldn't handle the extreme demand this Sunday, and they had to shut down. And this is disappointing for customers. I mean, we've had our share of scaling pains in the past. This time, it's a third party, which is nonetheless very, very frustrating. But we've been working with the team over at Blue Ocean, making sure that we're being as helpful as possible in them scaling their infrastructure, helping them with testing. And we are confident that they have a testing and scaling plan in place that'll allow us to release this product safely and handle much larger load across all the symbols we offer. And I think that's planning to be instituted over in the next week or so. I should also mention 24-hour market has been incredibly successful, and that's partly the cause of all this attention. We're nearing 30 billion in volumes since launch in the overnight hours, and we're really excited because this product is one of the reasons why we believe that customers would be advantaged on Robinhood, and they would have access that they wouldn't have on other platforms. So we're going to continue to invest in it. As with any product on the bleeding edge of innovation, you should expect the reliability and the quality to improve consistently over time. And we're going to make sure we continue to work with our partners, including Blue Ocean, so that we can deliver that for you all.
Amazing momentum. Thanks again.
Thanks, Dan.
Thank you. Our next question comes from the line of Steven Chubak of Wolfe Research. Please go ahead, Steven.
Vlad, Jason, Chris, good afternoon. Hope you're well.
Thanks, Steven.
Hi there. So I wanted to start off with a question just on a bigger picture one on the crypto strategy. There's been some speculation that we could get some improved regulatory clarity on the crypto side, especially with the change in administration. I was just hoping you could speak to the incremental revenue opportunity or how the strategy might evolve from expanding your crypto offering, whether it's adding additional coins, staking, or lending. And specific to the quarter, what drove the higher crypto take rate in 2Q?
I'll go ahead and start. It's Jason here, and Vlad can contribute with his thoughts as well. So in terms of what the implications would be of improved regulatory environment for crypto, I think what that would do is really allow us to innovate more rapidly and bring more to market what customers would like to see in crypto. And in the current situation, we're able to do that more in the EU than we are in the US. And I know that can be frustrating for our customers. And so I think you hit on some of the top things. We'd be able to offer more coins, and certainly there's a wide selection of coins that because of the regulatory environment, we're not comfortable listing today. We'd also be able to innovate in new products and services, things like lending and staking, and bring that to market. So in terms of the revenue opportunity, I mean, I think for tokens, you could just estimate looking at share of market and overall industry volumes as they are traded in other platforms here in the US and abroad, as well as the other services that we don't yet offer. So I think it could be meaningful, and we're continuing to work with our regulators to gain that clarity.
Yeah, and I would just add that, of course, clarity is good, and we believe the U.S. Needs to be a leader in crypto, and we will get the clarity here in the domestic market. We haven't felt constrained by this with regard to our crypto business. We've been really happy at the speed of execution and innovation. Of course, we built a system that offers different products, Solana staking, more asset selection in the EU. In the US, there's plenty of work to do, and we believe we can be successful regardless of what administration ultimately ends up taking power in November, or if it's the same one. We've done a lot of work to innovate on pricing, and you've seen year-over-year increases in market share and volumes of our crypto business as well. So there's plenty of work to do.
The second part of your question, Stephen, was around take rates. And so in the quarter, the crypto take rate was 38 bips. That's up 3 bips quarter over quarter. That's really due to pricing experiments. Looking at Q3 in July, the crypto take rates were in the low 40-cent range. And we'll see how we go from there. But we continue to offer great pricing to customers and are excited to see how the quarter plays out.
That's great color. And if I could just squeeze in one more just on the rate outlook. Fed futures now pricing in 4 additional cuts since the last earnings call. It might be helpful if you could just speak to the sensitivity to rate cuts or provide an update. But also, what are some of the potential offsets that you envisage on the revenue side that could help mitigate some of that pressure on NII?
Sure, I'll take that one. So first of all, we've got a lot of experience operating in different rate environments, high rate environments, low rate environments. One thing that we really like about our business is the natural offset between rates and trading. So as rates fall, asset values and trading tend to increase. And overall, lower rates tend to be a tailwind for growth for our business. I think there's a couple of important things to call out. First, we've been growing our interest earning assets at a really nice pace, but not all of our interest earning assets are sensitive to rate changes. So actually over half of the balance of interest earning assets relates to our cash sweep, and the spread we earn there is relatively fixed, which minimizes the impact of changes in rates. Second, we're broadening the way that we serve our customers, and that's leading to a much more diversified business for us. Specific to the question you asked about what the rate impact is, so assuming a 25 basis point change or decline, that would affect NIM by $40 million. And hard to predict the exact timing, but we feel good about the natural hedge. We have $1 billion of transaction-based revenue, and it takes a relatively small uptick in trading activity to offset that decline in interest.
That's great color. Thanks so much for taking my questions.
Good answer.
Yeah, you bet.
Very specific. Good answer.
Thank you. Our next question comes from the line of Craig Siegenthaler of Bank of America.
Good afternoon, everyone. Hope you're all doing well. So my question is on big picture organic growth. This was the second quarter in a row that your total organic growth has exceeded 40% annualized. Now, there's a lot of drivers in there, like the matching efforts, but some of your initiatives, like the UK brokerage and Europe crypto, are very early innings. So we wanted to get your thoughts on the potential organic growth rate in the second half, just given all the moving pieces. So is 40% sustainable?
So we have a long track record of 20% plus organic growth rate, and we have a really strong first half of the year, as you pointed out. What I can say that would be helpful here is that that's continuing so far into Q3. We're seeing an incredibly strong July with activity across the three trading categories up 20% over the June levels, and we're seeing that continue in August. So over 4 billion of net deposits in July and over 1 billion in the first week of August. So all signs at this point in the quarter are showing that our customers continue to engage with us, continue to deposit their money with us. And I think as Vlad mentioned, we now have 8 businesses where the annualized revenue run rate's over $100 million. And so we're much more diversified today than we were even just a couple of years ago, and I think very well positioned, especially as we continue innovating for customers and rolling out new products to continue driving outsized organic growth.
And I just want to emphasize one other thing I mentioned earlier in the remarks, which is that we haven't really taken the lid off of the new active trader products. Our active trader business is the most mature, and investments that we make there have the most immediate impact on our business, relative to our investments growing wallet share and also internationally. And we've got an event for our active traders in October where we're going to unveil some new products. And I think we're getting very, very excited about it. So, those results that you're seeing, I mean, they're good results. We're proud of them, but I think we have plenty of room to run on the active trader side. And that includes margin, but it also includes new product innovations that we've been baking for the majority of the year.
Vlad, that's great to hear. On the innovation side, I think there's still a few product gaps versus some of the more established online brokers, and I'm thinking like custody mutual funds, fixed income products, CDs. Now, you do have ACAT functionality now, and I think that helps, but can you provide us an update on some of the near-term product gaps that you can fill?
Yeah, well, what I'll tell you is that on the active trader front, we've talked a lot about futures. We've talked a lot about how we're great on mobile, but there's a lot of existing customers that need the more power of a web interface and a desktop interface so they can take advantage of extra screen real estate and use better tools and charting. So those are gaps in a way, but also opportunities for us to really differentiate and innovate and jump ahead of what we've seen elsewhere. I think regarding more sort of like passive buy and hold assets like CDs and mutual funds, we're climbing the capability curve with our ACAT transfers product, and we made a ton of progress just this year, making the process of moving assets into Robinhood as easy as possible. I think that's really led to some of the bottom line results that you're seeing, including net positive account transfers from every major incumbent brokerage firm for several quarters running now. And the goal would be to actually accelerate that over time. We see plenty of opportunity. We want to remove reasons that customers have for withdrawing, and we think we can systematically reduce reasons for withdrawals over the long run, and also increase reasons for customers to deposit. And so this is one thing we're really focused on, and it's going to take some time to play out. But I think you should see that reflect over the long run and increase net deposit activity. We're going to go through and add all of the assets that are missing. We're going to add all the capabilities. And then we're going to make sure the process of transferring is better at Robinhood than anywhere else. And then the incentives that we offer because of our economics are just kind of the cherry on top that I think will really accelerate asset growth into the platform. So there's so much to do here, and we're just at the beginning. And we only started offering incoming ACATs in the past couple of years, and we've already made a ton of progress here.
Thank you. Again, we ask that you limit yourself to one question, then fall back into the queue. Our next question comes from the line of Devin Ryan of Citizens JMP.
Hi, good afternoon, Vlad, Jason. Great quarter. Question, would love to just dig in a little bit around how you guys are thinking about the incremental margin potential from here over the intermediate term. So, obviously already at a mid 40% EBITDA margin, 90% of the current expense base is fixed. And I know 50% plus is the objective, but you really aren't that far away from 50. So just love to think about like what the ceiling looks like here. Is there one, because you have such an efficient tech stack and infrastructure? And then, is there anything on the roadmap that, could drive a material acceleration in fixed expenses from the core pace? So just trying to think about kind of where we could go. I know what the targets are, but just the algorithm. Thanks.
Yeah, I view kind of the 50%, Devin, as more of a way station on our path to the longer term margins. You've seen us drive substantial incremental margins over the last few years. This quarter was 77%, and it's really a reflection of us driving up revenue and managing our costs closely. I think a good analogy to how we're thinking about costs long term is looking at what we did in 2024. We looked at our existing businesses and held those businesses to a low single digit and in some cases negative OpEx growth rate. And we use those savings to help fund specific growth investments for the business. And there are many that we've been talking about and alluding to on this call. And we set aside an extra $100 million in marketing budget. And all that translated to operating expense guidance that was up 5% at the midpoint, which we continue to reiterate. And so, I think we have a lot of opportunity to see continuing leverage in our existing business. And then you're going to see us on top of that continue to make very targeted, high expected ROI investments for growth. In terms of things that are out there on the roadmap, it's too early to give specific guidance. The one thing I'd point to is we are rolling out a credit card, and as Vlad talked about, we're being very patient in the short term in the way that we approach that. But that'll certainly be some incremental investments next year. But we'll stay tuned for specific guidance on next year.
Yeah, the only thing that I would add to that, which I think is interesting, is I think we've talked a lot. You hear a lot about AI and the impact on different sorts of companies. I think one area that we maybe haven't emphasized as much is how we've been making use of that operationally, including for engineering. And as we look at kind of the core engine of our business, we're creating software, we're rolling out products to companies, and our business, even though we're in financial services, is technology at its core. And we've seen a lot of impact in applying these AI tools on the engineering side, just making different parts of software development process easier and simpler. That's an area we're investing a lot in. and I think there's a lot of room to run. We've already seen significant productivity gains in the past year, and we think we're closer to the beginning than to the maturation point of that cycle.
Thank you. Our next question comes from the line of Patrick Moley of Piper Sandler.
Yes, good evening. Thanks for taking the question. So I had one on the gold offering. You've added a number of things over the last few quarters. You're planning to add more before the end of the year with the web-based platform and options and futures trading, or index options and futures trading, rather. Just talk to us about your thoughts on pricing here. You're at $5 a month now. What's the appetite to go higher, and how do you kind of balance that pricing dynamic with your desire to kind of continue to grow that subscriber base? Thanks.
Yeah, I'll go ahead and take this one. What I'd say is our focus right now is increasing the adoption rate of our customers in gold, and we're doing that by just continuing to invest in the gold program. And we love the economics. I mean, it's great that we have the subscription revenue that's north of $100 million annually, but it leads to downstream effects, higher adoption, faster net deposits, and seven times the ARPU. And so we're not feeling pressured in the short term to raise the price. It is something that we will continue to look at, and we don't have religion that we wouldn't touch the price over time, but right now it's not the top priority.
Thank you. Our next question comes from the line of Kyle Voigt of KBW.
Hi, good evening. Maybe a question on margin balances. So you know that the impact of cutting your margin rates and the subsequent margin balance growth of 20%. I guess, is there any way you can disaggregate how much of that growth is coming from existing Robinhood margin clients simply utilizing margin more versus maybe customers where you know they were utilizing margin elsewhere and have simply transferred or switched that activity to Robinhood? And if there is some of that switching that's happening, can you comment on if the customer margin inflows have generally been from one firm or broad-based from retail brokers across the industry?
Yeah, I'll go ahead and take this. So it's mostly from existing customers, but we're seeing both existing as well as new customers take advantage of the lower margin rates. And we continue to see this grow in July. We talk about one of our top 3 strategic pillars is to be number 1 in active trading. And as Vlad mentioned, we've made a lot of progress on market share for both equities and options, and overall are number 2 in active trading for those categories for trading. But we're a distant 5th in market share in margin. So it's a huge opportunity for us. We just lowered the rates in May, and we saw the 20% move to the end of the quarter. That's continuing in July, and we think that this is a really big opportunity, and we're definitely starting to take share there. We grew much faster than our peers in the second quarter, even with the May change in the rates.
Thank you. Our next question comes from the line of Michael Cyprys of Morgan Stanley.
Hey, good afternoon. Thanks for taking the question. Just wanted to ask for a little bit more color and update on the international expansion efforts, in particular in the UK, in Europe, and around the world. Just curious what sort of traction you're seeing so far. What steps are you looking to take here in the second half and into 25 in order to accelerate growth? And as you think about and look about building out the platform overseas, just curious what challenges you face versus having built out the business in the US and how you're looking to overcome some of those hurdles. Thank you.
Yeah, thanks for the question. I'll field that. In a nutshell, we like the early signs that we're seeing. So far, account balances overseas are a little bit smaller than the US on average, but the trading characteristics are pretty similar. And what we really like is, as we hear from customers, both in the UK for brokerage and in the EU for crypto, they want things that we offer in the US. So UK customers are requesting margin and options, and EU customers are requesting the ability to trade stocks. So that, I think, validates in part our strategy of expanding with one unified platform internationally, and having the same technology be available in as many markets worldwide as possible. So our focus really is rounding out the feature set in the UK and in the EU, making sure that all of the great products that we have available in the US can be made available there. And that involves working with the relevant regulators in these jurisdictions, taking them along and giving their customers access to all of these awesome products. We feel really, really good about that. And then simultaneously, we are looking into expanding to other jurisdictions.
Thank you. Our next question comes from the line of John Todaro of Needham.
Hey guys, congrats on the quarter. Good results here. I just wanted to drill down a little bit more into Bitstamp. They offer a number of crypto offerings and then also the trading pairs. Just first part of that is, do you anticipate growing products with that acquisition in the U.S., or are you still a little bit hamstrung on regulation? That is the deciding factor. And then just two, within that, Bitstamp historically has had higher trading fees than Hood. Do you think those fees on the platform could kind of go higher as we saw take rate going higher here, or should we not read into that, the Bitstamp fees?
I think there's two interesting things about the Bitstamp acquisition that you should know. One of them is international. The second one is institutional. The business is a global business. It operates in a lot of jurisdictions, and we could see that accelerating our international expansion on the crypto side significantly, and also dovetailing quite nicely with the large retail business that we currently have at Robinhood and the great product innovation that we're driving there. The other thing we're excited about is institutional business, and they have great relationships with institutions. It's an area that we believe we're well positioned to tackle because we've built great technology for consumers, and institutions also want low costs for market access to crypto. And so we're really excited about the acquisition and working really closely with the team and making our joint products better and better. And I wouldn't over-index on their fee structure at this point. I tell you, philosophically, we want to be the market share leader, and we want to offer really competitive rates to customers. And that's kind of the North Star that Robinhood operates under. We'd rather offer low fees, and due to our investments in technology and infrastructure, operate at larger scale than our competitors. So you should see us continuing to be aggressive there. But we don't have any specific. I think it's premature to talk about like the specific changes to the fee structure at this point.
Thank you. Our next question comes from the line of Chris Allen of Citi.
Thanks for taking the question, guys. I wanted to dig in a little bit on SEC lending, if possible. Seen some really nice growth in the customers enrolled and the assets under custody enrolled. And just maybe talking about the outlook here, are you seeing customers enrolled putting more money to work here? Are you seeing just the momentum pick up? And just during the quarter, was there any? How would you frame the environment from a SEC lending perspective? Because it looks slower at some of your competitors out there.
Sure, I'll go ahead and take that. I mean, the primary inputs to the business are signing up more customers, and we saw a really nice pickup there. About 400,000 customers joined the program in the quarter, and the assets that are enrolled, and that increased by a little over $6 billion. So really, really strong inputs into the business. I thought the trading desk did a really nice job. The other input is just the rates that are available and the specific names that we call specials, where there's a higher rebate that we'll earn on lending activity. And we saw, some nice, attractive returns in the quarter. So I'd say, the inputs and the momentum of growing that program is really strong. The trading desk is just doing a great job, and we'll have to see how the rest of the year plays out.
Thank you. Our next question comes from the line of Matthew O'Neill of FT Partners.
Yeah, hi. Good afternoon. Good evening, everybody. Thanks so much for the question. Just wanted to follow up. Really, the only nit to pick here maybe was the monthly active user number, and I fully recognize the importance of that number is probably coming down over time as you diversify into more products, and some are longer term and less frequently used. But just curious if there's anything to call out, maybe around crypto activity or otherwise. Thanks.
Yeah, I'll field that, and then maybe Jason will have some thoughts. One of the reasons we de-emphasized monthly active users, besides, as you mentioned, us investing in all these diversified products like Robinhood Gold, which is a yield-based product, and retirement, and us not directly monetizing monthly active users yet. Like we don't have an advertising business, for instance. Is that it's just volatile quarter to quarter, and a lot of the monthly active user variation is just driven by what's going on in the crypto market. So since we're so large in retail crypto, that can cause meaningful swings in monthly active users quarter over quarter. And that's pretty much what you see going on. When the crypto markets are hot, there's a huge immediate spike in monthly active user engagement metrics. But then when crypto cools down, that tends to drop more acutely as well. And I think that's pretty similar to what you'd see across the entire crypto market. I think that's not a idiosyncratic Robinhood phenomenon.
Thank you. Our next question comes from the line of Ken Worthington of JP Morgan.
Hi, thanks for taking the question. I would love to get a bit more color on how the recent market sell-off has impacted your customers. You gave us some color on trading activity, but margin balances have been growing, as you called out, sort of recovering with the market, but then growing with the more competitive market rates that you announced, sort of going right into this sell-off. So how did Robinhood customers perform in the sell-off in August and recent days? And can you distinguish the health of your equity sort of long-only customers, given their access to leverage, versus those with option capabilities where they can both hedge and speculate with options?
I'll go ahead and take this, and Vlad, you can add some context. So first of all, customers who are trading options and those that are using leverage tend to be our more advanced customers, and they're using a variety of trading strategies to create returns. The thing that I would point to is that we feel great about offering low price and attractive rates, and the rates that we offer on the margin book, as an example, are on average leading across the industry. And so feel really good about that. I don't think we've shared any specifics on specific returns that individual customers are having or groups of customers. What I'll tell you is almost every time I look at the daily summary reports, when there's a sell-off, our customers are buying, or when prices are up, our customers are selling. And that contributes to kind of a pretty attractive return capability for customers.
Yeah, the only thing that I'd add, Ken, is there's a number of areas that we're focused on, and I outlined them in the call. One of them is being the leader in the active trader market, and I think when the goal there is when people think of Robinhood in the active trader space, they should associate us with being at the frontier of technology and innovation in trading. And I think products like 24-hour market reinforce that. And we do have work to do, both on the product side and kind of in how we tell the story, to move away from sort of this like thought that we're for novices. The reality is most of our customers are in their 30s. They're definitely adults, and they're extremely sophisticated. And we're in a competitive market for serving this very real use case, and we're gaining market share, and it's a big part of the core business. But we also have customers that are coming to us for Robinhood Gold, for our high yield products, for our awesome retirement products that has been growing assets very, very tremendously. And, they're less interested in trading actively, and that's fine too. We think that we can be a leader in wallet share, particularly for the millennial generation. And that's something that we're also focused on. There's going to be tens of trillions of assets going from baby boomers down to Gen X and Gen Y and beyond. And we're putting Robinhood in a position to be one of the, if not the primary beneficiary of that long-term shift in assets. And that's kind of how you're seeing the work we're doing in ACATS, diversifying the business and adding support for different assets. And so we're very excited about that, but we think we can be leaders in both.
Thank you. Our next question comes from the line of Ben Budish of Barclays.
Hi, good evening, and thanks for taking the question. I was wondering, if maybe following up on some of your comments there, Vlad, if you could unpack a little bit the growth in options over the course of the year. What are you seeing in terms of like for like growth, or almost the same unit or same sales, if you will? Are you seeing, any stats you can share around the number of customers enabled for options, or is it sort of the existing base sort of getting more active? And when you talk about market share, clearly your options activity as a percentage of overall industry activity is going up. What about on the customer side? To what degree do you, to extent are you seeing customers coming to Robinhood for options, or how much of the growth is coming from new customers versus, increased activity from prior customers? Thank you.
Yeah, I mean, the thing I'd tell you, and maybe Jason can jump into, our options team's been doing a great job. We have one major advantage, several major advantages relative to what you see elsewhere in the options market. First of all, we don't charge options contract fees. So most of our competitors charge 65 cents a contract, which can add up if you're an active trader. And so, purely economic perspective, you're kind of at a disadvantage if you trade options outside of Robinhood, particularly for active traders. The other area is the user experience. And we've built and announced some amazing tools in the past couple of quarters, including option simulated returns, which gives people a pretty advanced analytic tool that they previously were downloading other products and paying subscription fees to get. Now that's built in with Robinhood. And we've done awesome improvements to the user experience to make it easier for customers to do the transactions that they want to do. And we've got a lot of remaining work to do. We know a lot of our customers like trading options on desktop, where they get additional screen real estate and have the opportunity to do more research on platform. And so we're confident that we can keep growing that market share even further.
Yeah, I would just say that the number of customers trading options are up about 25% year over year.
Yeah, the team's really been doing a great job.
Thank you. I would now like to turn the conference back to Vlad Tenev for closing remarks. Sir?
Okay, well, thank you everyone for listening. We really appreciate the engagement from shareholders and the analyst community. And also special shout out to the retail analysts. We have a lot of retail analysts that cover the company as well. Maybe they're not on these calls, but they're on YouTube and on X. We appreciate you all, and look out for us on podcasts and other things in the next couple of days. We're
we'll share more about the company.
This concludes today's conference call. Thank
You're muted.
You got something to share, Amit?
That was that was cool, right? That was pretty cool. That was cool. He gave a nice little shout out to the YouTube guys like Tanner and I. So that was cool. That was super dope.
Yeah.
Awesome. Okay, so I have some thoughts, and I want to just quickly say my thoughts on a couple numbers that I got from the call, and then we'll go deeper into other things. So
when's he coming on the channel? That's all I want to know.
So, anyway, Q2 was really good. Q3, which is my biggest concern, has been, well, I'm happy. First of all, I'm so happy they take so many questions. I love when a company does that. But the most important question in this call was, hey, is this sustainable? Like 40% growth, Q1, Q2, is this sustainable? Here's what the CFO says. He says, in July, which is the start of Q3, trading volumes were 20% higher than June numbers, which means trading revenues are going to be higher for equities, options, and crypto. So July, overall good start to Q3 from the transaction revenue side. Then on deposit growth, July they did $4 billion of deposits, which it is just incredible because they did 4.7 the month before. And then in the first week of August, they did $1 billion of deposits from August 1st to today, August 7th. So this is getting to the point where they're doing $1 billion of deposits a week. Let me say that again. They did 4 billion in July. 4 divided by 4 is 1. In the first week of August, they did another 1 in the first week. That means they're getting to the point where this is a company that's going to be doing at minimum 12 billion a quarter, which is just phenomenal. It's just exceptional. So that's my biggest takeaway from the call. For those that are worried about if this Q3 growth will live up to Q1 and Q2, obviously we don't know what's going to happen in August and September. But so far, July is off to a good start, and I think that's really important to understand for Q3. Tanner, your high-level thoughts, and if you want to get nitty-gritty on anything from this call.
He said, we want to reduce the reasons why people withdraw. Now, I don't think that'll be with taking away the withdrawal button or something like this. I think it's more along the lines of doing stuff like adding credit cards and allowing for people to not have to transfer it somewhere else so then they can spend. So, I don't know, Amit. I guess next time you're in a conversation with Vlad, maybe ask him, what are some of the main reasons that people are withdrawing, and how do they want to try to answer those questions? Because obviously, I think the product pipeline for Robinhood right now is really focused on some of the active trading things. Like they said, they get immediate boosts whenever they put out products like that. But another thing is the sort of holistic view of like, okay, we want to treat these people as if they're coming on the platform to save money, to spend money, to invest money. That is how they become a massive, massive business. And I've got some more thoughts, but I'll let you take it from there and then I'll swing back.
Yeah, so I agree with that. My first high-level thought, again, was that Q3 guidance. I thought that was really important.
Yeah.
Here's another thing that mattered. Again, following up from this, like, is this 40% growth sustainable? I didn't know this. CFO said they have 8 businesses that are doing 100 million in ARR. So 8 different parts of Robinhood are putting up at least $800 million in revenue. Second, he was very specific here. He said, look, if rates get cut by 25 basis points, it would take away 40 million of net interest income. So if you double that, that would be 80 million. But they do $1 billion in trading revenues. So a slight increase in trading revenues, meaning rates go down, people buy stocks, which is what most of the market thinks probably will happen when we get the rate cut, would offset the deficit of net interest income. Half of the net interest income is in cash sweep balances where they have a fixed spread. So that was a very specific answer. I saw some other takes on Twitter saying
over half.
Yeah, over half. Yeah. I saw some other takes on Twitter that said, well, if rates fall, that's bad for Robinhood. It's like, no, but a majority of their income on net interest is actually fixed rate. The rates are irrelevant to that. And then you just have to believe that Robinhood is a good enough platform for people to trade on when rates go down. And then finally, Vlad hinted to new products. The web trading app is definitely coming in this October event. For those that are thinking I'm going to be there, I will not be there. I'm going to be in India. So there's like no chance I'm going to be in Miami. If I wasn't, I would love to go and see it live, but they're going to probably announce that new web trading app. That's going to, if it's as good as Vlad is saying it's going to be, you are going to get people that are trading on other platforms professionally, like, hundreds and hundreds of options a day. And they're going to move to Robinhood for some reason. What is that reason? We'll find out in October. If that's the case, that should continue to expand on growth into Q3. So yeah, I thought that was really good as well for Robinhood.
I didn't get an invite either. Maybe I'll have to recheck my email. Yeah, hopefully they bring it to Canada, man. I want some Robinhood options available for the homies here up in the north. But
I agree. I was going to ask you about AI. What do you think his answers were on AI, and are you excited about AI for the business?
I'm excited for AI. I like that they are thinking of AI as their entry into advisory, which is interesting. But we'll have to see how Pluto does. I mean, the biggest part or the biggest problem that I have with AI in finance is hallucinations. And they still come. They're less frequent, but you can't give someone like I think you shared the Pluto sort of introductory video. If that thing goes wrong, if it tells you a strategy and it's incorrect, then people are going to stop using it immediately.
Yeah.
So I'm excited for it, but I also think that we're probably a little bit of ways away from it actually being, as useful as I'd want it to be.
Yeah, it's a very hard thing to solve. I think if they create, that's what I said in the morning. I was being hyperbolic, but I said I would pay $100 a month if I could literally ask an LLM, hey, show me 5 stocks with a PE below 20 that are growing, 15% year over year that have a dividend, blah blah blah. Like if I can just get exact answers.
I can give you a tool, actually. They're called screeners. They can do that for you, actually.
No, but see, so I pay for a screener right now. I think screeners become irrelevant on a chat-based interface that can synthesize literally large language. So what I mean by that is if I could ask the LLM, hey, give me 2 advertising stocks, look at all the press releases that are public that have come out over the past 2 months, and tell me which 2 advertising stocks are growing 30% year over year that aren't mentioned in all of those press releases. And so what if it says, this is a bad example because this is a good advertising stock, but what if it says, hey, Amit, TTD, the trade desk, is a really good advertising stock. They're growing XYZ, but they're only mentioned on 10% of the articles that have come out through the newswire that are tagged with advertising. Then I'm like, oh, so people aren't thinking about the stock, but it's growing. And I just synthesized all of that information that I would have to look at through all these articles in 2 seconds. And now I can buy trade desk because I think it's undervalued. Like that type of stuff, I would pay a lot of money for.
The 2 most forward-facing fintechs that I own are acquiring, AI companies right now.
Yeah.
So that would be Nubank and Robinhood are both actively going after AI, not just for the technology that they have today, but honestly, I think that it's a acqui-hire sort of a thing. They're getting it for the team, getting a base, and then allowing them to build from there. So, yeah, could summarize reports. I think there's
a lot of tools that
can do that, but
they're gonna have to take it to a next level, which is why I think they acquired Pluto. The other thing he said about AI is that it's helping their business, and I'm really curious when CEOs say, "Hey, the engineering operations, not just like GitHub Copilot, but like real, operationally, they're implementing AI to the point where they're faster, more effective, they save on costs, they're not increasing their cost guidance that much."
Do you think most of whenever they say that it's more than GitHub Copilot?
I hope so. I would imagine, like, here's an example. I would imagine Robinhood has a, this is not engineering example, but let's say they have a guy who's trying to close a deal on a sales call. He has a call, and instead of having to ask his superior on an objection he's getting by the person he's trying to close, maybe it's an advertising deal. Maybe they're negotiating a deal to spend $40 million on Facebook ads over the next, 5 months. They're trying to get a good deal done. And an AI auto summarizes the objections they're getting in the call and then tells him how to respond based on Robinhood's training when it comes to sales. So that's something where the sales guy doesn't have to go to his superiors and try to figure out, hey, how do I answer this question? He's like getting stuff via this AI agent. I know that's not engineering, but those internal operations inside of any business should lead to more productivity. And we saw that with Bank of America 1 month ago, said productivity levels in the United States are the highest they've been since 2008. So if they can drive that across the company with engineering, honestly, I think it's GitHub Copilot. I hope it's more than that, but that's like the most I understand for AI helping them. That should lead to a more efficient business for every company, which is kind of, the broader AI thesis as well, which is important.
Just a general, like broad investing. I think that it's super interesting, right? Like AI is not just the picks are not just for AI plays or Robinhood. It's just broad productivity in general is going to improve. But Yeah, on to Robinhood's thing. I also like that they gave the breakdown that they're actually not rolling out this credit card slowly. They're kind of doing it as fast as anyone else would. There's just so much demand that it actually makes it look slow, which is a super good problem to have.
Yeah. So on the credit card thing, I think people really are a bit impatient because they want to get their hands on it so much, but
because it's so great.
Because it's so great. Yeah. Same thing with 24-hour markets. I'll talk about that in a second, but that's a good problem to have. I think they're being very smart, not giving everyone a line of credit that's more than other credit cards and then 3% cashback. Like, it takes time to make sure the math of that makes sense. So I think if they're only going to do 500,000 by the end of the year, then 500,000 the next year, as long as they do that profitably, because you don't want them to give you a credit card and then take it away because like they're going bankrupt on the credit card. It doesn't make sense. It's not working out on terms of the unit economics. So I think that was a good answer. I think the 24-hour markets, I also think this was a good answer. They shifted the blame. They said, hey, it's not our fucking fault. It's Blue Ocean. But one thing I want to point out to people is that it's not even Blue Ocean's fault. It's Schwab's fault. It's Fidelity's fault. It's E-Trade's fault. All of these guys are not participating in the 24-hour markets, which means there's a lack of liquidity. So if everyone's like, oh, well, what's the point of 24-hour markets when, the stock market goes down? It's like, well, when any market collapse happens, you have circuit breakers, you have the market shutting down for 30 minutes at a time, because you need liquidity. And so if Robinhood is just sitting here on an ocean that is blue and that doesn't have the liquidity from Blue Ocean, that was good, right? That was good. Then they can't let you sell your Nvidia shares, right? So I think they need other brokerages to participate, just like crypto has everyone participate, but the other guys don't want to do it. So I don't think we can really blame Robinhood here.
I agree. I think that there's this weird thing where some people think that 24-hour markets are, I don't want to use the word predatory, but just sort of leaning more towards gambling rather than something else. But honestly, if a buyer and a seller can come to an agreed upon price, I think that there's zero problem with it. You do not have to participate, but if you want to, it's an unbelievable addition to markets. Crypto trades on a 24-hour market 100% of the time, and there's no, like, you can still get sleep. Like, I don't know. I think that is the way, not just 24/5. I think,
dude, it's American freedom and capitalism. If you want to trade at 2 a.m., you fucking trade at 2 a.m. You should be allowed to. What arbitrary restrictions are we,
Yeah,
I mean,
I think all markets will be 24/7 eventually, and that's very interesting. And Robinhood is always first on these products. Always.
Yeah. On MAUs, I thought Vlad had a good answer. First of all, he said MAUs are irrelevant because they're not advertising. So it's not like they don't make money just off user engagement. They make money off diversified products that are reoccurring. Like if you don't use your Robinhood app, but you're a gold subscriber, they're still going to make $5 a month off you. So,
or if you just have cash sitting there.
Yeah. Or if you just have cash sitting there, you're a long-term investor, you don't care about looking at your portfolio, which all of us should have taken that advice over the past 2 weeks. So that's important. And then number two, he blamed it on crypto. He said, you know what? It's the fucking crypto markets. They get hot, they get cold. It's not our fault. I thought it was a good answer. And I like that he said it's not idiosyncratic to Hood. It's a broader issue with, the crypto industry.
Yeah, I think he mentioned that on your first interview with him, but it is really interesting nonetheless to think that, like, it only matters if there's some sort of advertising platform or something that's going to monetize your time specifically when you're on that app.
Yeah.
I'm sure there are benefits to MAUs just because if people are staring at their charts, they're probably more likely to buy and sell. But even the fact that they're not trying to boost that is probably better for Robinhood's reputation in the first place.
Yeah. No, I agree.
Yeah, I think this was an amazing quarter. And once again, they slammed it out of the park with reaffirming that further guidance for July and August are looking extremely positive. So not much to hate here. It was a great quarter, great call. The market is going to do what the market is going to do. If you guys remember last quarter, it was the most spectacular Robinhood quarter that we've ever seen. And the days to come, it actually ended up dropping pretty low. Yeah. Like, I think it was at one point in the after hours ran up to like $20. And then by the next day, it was down to 16.
Yep.
Like, it was incredibly low. Then as the months went on, then we climbed all the way back up to like $24 a share. So be a little patient and enjoy owning a company that is, like Vlad said, potentially the primary beneficiary of the great wealth transfer.
Yeah, and also I think be proud that you're owning a company that's just innovating. Like that's really pushing out product, and they care about the user experience, and they're giving themselves a new challenge to see how much better they can get. And then if that company falls, be even happier because it's like the dip gets very easy to buy when you have certainty around the business, and we're starting to get more certainty. My biggest thing was how Q3 is going. And if Q3 is going strong, we still have 2 months left. Let's see how that plays out. But if things are on the right track and they're getting to the point where they can normalize a lot of these results and expand, then I think Robinhood will be pretty good. All right, that's it for me. Check out Tanner as well. His YouTube channel I'm putting in the chat. If you are not subscribed to Tanner, he does a fintech show every single day. SoFi, Upstart, Robinhood, Square, all those companies he analyzes. And thank you everybody for joining. I'll be live tomorrow, Monday morning. Not Monday morning. Tomorrow's what? Thursday morning, 8:45 a.m. to break down these results even further. And we'll keep going from there.
Thank you guys. Appreciate it.
Super fun. Thank you everybody. Hope you guys enjoyed. We will see you on the next one, and I'll see you tomorrow morning. Good night, everyone. Bye-bye.